Right, everybody. Welcome to the session here. My name's Rodrigo, and I'm going to be here with Nic Chahine, lead trader at the Benzinga Options Inner Circle chat room. I want to give a couple shout outs here. We got Levy, Larry in the house, Nimesh, Nirav, what's going on? Tom Twelcher, Mr. Donahue, what's going on? Derek in the house, Brent. All right, guys. So good crowd there. We have a couple members in the chat. Just to let you guys know, we're going to be going over trade ideas, options education, and a full backdrop, not just on the markets, but options as well. Nic Chahine has been trading options for 20 years. He's been with Benzinga for about 11 years, and he's helped me personally as well with education, right? More importantly, not just trading and all that stuff. So let's go ahead and get this started. What's up, Charles? Let's bring in the man of the hour here, Mr. Nic Chahine. Let's go.
Hey. What is happening?
How are we doing? How is the session right now, man? I know that you just got off there, right?
I literally got out, wrapped it up, produced the videos, 3 of them, 148 tickers, plus a discussion about some other stuff, broke it up into 3 different videos in order to make it easier to maneuver.
These are the videos, the ones that I'm showing here?
Yeah, that is the Sunday charts. And it goes with a little spreadsheet that goes there. Mm-hmm. So it is a lot of work. I do it on Saturday. The people ask for the tickers. I don't pick them. So these are your tickers with comments on each one almost. And what it is, it's a very simple, honest truth about what I expect price actions can happen. And actually, there were 2 videos in there as well. One specifically for Tesla, and the other one is for oil in general, which encompasses about 10 tickers in there. What do we do with the oil rally? We nailed oil, as you know. We shorted it at the top, and it was an extremely profitable trade with Exxon, Oxy, and the USO. The plan is I closed my Exxon and Oxy shorts. I will re-engage short if they pop again. And the way I do it is very, very simple and safe. I don't short the stocks outright. I'm not stupid. I'm still short the USO, but I don't need it to fall anymore. I sold the call spread that is at maximum gains almost, so I'm looking to get out of it. So The strategy this morning, I mean, the session this morning went well. It was pretty fun. Some people had specific questions we discussed. So pretty busy, but it's worth it. All these hours of homework that you're looking at right there, and I'm no joke, it's hours. Just type a list that long and see how long it takes you to type a list. And these links, the hyperlinks that you see, HTTP, www, those are clickable. So if he clicks on it, it will launch a corresponding chart. So if you want to refer to it during the week, you have access to it. They're alphabetically broken down, and this way it makes it easy to scroll through the tickers you want. So personally, I wouldn't trade all of these stocks, but if you ask for them, I will answer. There are some micro caps in there that I would never ever trade, but there are some people that like them.
Right, Nick.
We discussed crypto as well.
Yeah, I know that you've been getting into crypto a lot, but basically you're there with the people Monday to Friday, 9 to 5. Like this is your life, basically, right? Like this is where you're at all day with the chat members, right?
This is where I'm at all day. This is where I'm at. It's just the idea is to make it so it's convenient for the people. If you cannot do homework yourself and you need help, I'm here to help out with the homework. So if you have ideas, I want to hear about them, because maybe I like your ideas. I want to trade them as well. So it works well. It's a lot of work for me, but it produces very good results for everybody, which feeds my drive. So I work too much and I get flack from my family for it, but I'm seeing the rewards from the thank yous, the learning. You mentioned learning. It's not so much I'm a great trade alert service. I'm much better educator. I empower you to understand what I'm doing so you can do it yourself without me. But I beg you to stay in my group because I want your ideas with me. And as a group, we trade better. And you'll see how it all came to a point to where the most productive part of it that we do now, which is the live room, has nothing to do with nothing to do with the plan. I started out, the journey started with Benzinga about 10, 12 years ago. I want to say 2011. It was to tell people credit spreads. Here's a credit spread I did, see if you can copy it. That was kind of the idea. Well, it turned into something so much more than this with the chat room. So we had a two-way communication method between me and everybody else in the group. Let's say you had a job and you had a question and you just pop in, and you pop in and say, hey, I saw the write-up, I don't understand this, or I took it, I'm in trouble, what do I do? Or I have this other trade I took from somebody else and I need help with it, what would you do? So it's a two-way conversation that happens at your speed, at your schedule, and I just pop in and I answer whenever I see it. So that was great. And then we opened another layer of live room. So every day I'm sitting with 300 of my best friends and trying to trade the price action intraday fast. That's what I created the live room for, but it turned into so much more. Yeah, this is it. This was last week's room. They're still logged in, but tonight I will give them the address for a new room. At the height on Fed Day, we had 385 people. Every given day, it's between 260 and 320. So that's a lot of people just glued in, listening to me, watching my screens. And I do have one screen, but multiple windows, and just looking out for opportunities. I'll give you an example. 2 Fridays ago, the opportunity came out of somebody asked, hey, what about Wells Fargo? So I jump into Wells Fargo and I look at the options and I say, wait, there looks like there could be a spike here today in Wells Fargo. I'm buying calls. It was like 25-cent calls and they ballooned. Same, like a minute later, like 10 minutes later, somebody asked me about CCL. Same thing. I saw a rally up. I can't remember the value, 1150. Out of nowhere, I said, I think they get to 1150 or 1160, and they went to 1160 and died. It was a 2-cent bet that turned into like 15 cents. I know it sounds fiddly, but if you risk $20, you made a car payment. So, well, small car payment, or you paid your gas bill for a couple of weeks. So it was a good opportunity. So the back and forth live is so rewarding. I'll show you. in a little bit blurbs as to what I hear about. I mean, I can't take enough pictures out of it. Every day somebody's telling me a story that is just heartwarming. And I take a picture. I say, do you mind if I take a picture? No, go ahead. Okay, so I take a lot of pictures, screenshots, just because it feeds me. Oh, I didn't cover up his name. Anyway, so I don't think he minds. Damn near doubled my account this week. That was, I don't know, June 17th. So the monthly, 2 weeks ago, that was one person. So
Right, Nick, really quick. I just want to make the chat members here that are aware, for them to know that you do have a full library dedicated for them, where you put all these
yeah,
sorts of videos. If you can
the focus, definitely the focus is on learning. My focus is I'm more interested in trying to find what fishing pole works for you and how to use it best. And then I want you back in the room in order to make us more opportunities. So I have 2 or 3 people in the live room. They each now specialize in something. I have David, and his logon is D Invest, and he's focusing now on just watching one simple aspect of a tool that we use called TradyTix. There's overall options flow, and it gives us as to where the market is thinking for like minute to minute. So he pops in 2-3 times a day saying, hey, something just changed. So now we know that the body language is this way or that way. Something just changed. This is what I'm seeing. And then I go and verify it. So now everything we're thinking intraday, we start thinking along the lines of, hey, we have that overall comment from David. Other people like Friday. Oh, here's the thing. So Friday, I thought for sure we would break down and close below the highs. Katya, who is a member of the Inner Circle, is a specialist in charting using pitchforks. If you don't know what that is, it doesn't matter, because she does. She's like, no, watch out. We're going to go to 30, another 40 points higher. We damn near came close. So she gave us the heads up. I was doubtful, but I said, you got to respect the price action. And guess what? For the second time in only about 5 months, the price action broke through the options data. So options data is bulletproof. It failed about 6 or 8 weeks ago on a Friday. It failed last Friday. They went too far. And that was a bad news 6 or 8 weeks ago, because we started a big slide from it. I'm not saying we're going to slide. I'm just saying, thanks to Katya, we knew that upside possibility. So we didn't short aggressively. Okay. So if you have time to join us in the live room, here's a statement. I guarantee you opportunities to profit every day. That alone should be worth the membership, whatever they're charging you right now. If you cannot be in the live room, you're not missing anything, because the only thing you're missing is just you talking to me and listening to me talk. That's it. All the opportunities that are tradable, longer term, if somebody has a job, those don't happen in the live room. We discuss them if we want to, but I usually write them up and send them in writing with videos and such. So if you're in it to see opportunities that you can trade within your schedule and learn about them, you're not missing anything for not being in the live room. And in addition, you have the chat room, so you can pop in at your own convenience and drop me a message. Think of it like Discord, to where you don't have to chat with me live while I'm during the business hours. You can just say, hey, I saw this. What do I do with that? What does this mean? Or have you done anything today? Or where do I go to learn about this? And somebody joined, said, I'm new. Where do I go to learn all of these terms you're using? So don't feel bad that you cannot be in the live room. It's extra. It's not taking away anything. In fact, it's adding to the overall results, because we are smarter for it. Therefore, our decisions on everything else slower is smarter. So hopefully today we can give you a glimpse as to what goes on in the world that we offer. And I don't work for Benzinga. I work with them because I do like how they do business. They're stand-up. They promise something and they try to deliver it. If they can't, if you feel that they didn't deliver, then they'll give you your money back. So I promise you, I guarantee it, that you will be a better trader leaving my group. I guarantee it. Whatever you will do now, I guarantee you will be better at it. and learn new things. I just delved into pitchforks. I've never considered them. I know what they are because of how solid Katya was and how sure of her forecast she was. That makes me want to learn more about it. So I opened 3 videos this morning. I got more confused. So I have questions. I'm going to have to find another 3 or 4 videos to get better at it. That's it. So we pick up new tools. I send them down to you to look at them. But the fewer tools, the better for me, unless it provides something I was missing. So I will look into Pitchfork. And if they don't provide anything I was missing, I may or may not incorporate them in my day-to-day life. So learning is number one. I guarantee you will be a better trader out of this program. And if you're getting to want to learn from basic, you would come to the right spot. I'm very patient with my instructions. My videos are very basic, and I can go even more basic if need be. If somebody says, I don't even know where to open an account, I'll go out and do a video on that and see if I can help you out. Crypto, I can get you off the ground with crypto with very little risk comparatively. I'll break it down into same plain simple English. Don't listen to these experts in the media. Warren Buffett doesn't know diddly squat about Bitcoin. And for him to poo-poo it like that, it's shameful. Smart guy, total great investor, but he has no right to do that because he said that about Apple for like 10 years. And now Apple is its biggest holding. So I'm just saying, don't let other people's opinions stop you from making the easiest money. The easiest win I did in the last 2 weeks is buy Solana, which is a crypto coin, for $27, and now it's $42 in like 2 days. So, okay, so I'm not married to Solana. I can just book the profit and move on. But the plan was from November. So it wasn't like I lucked out. I didn't luck out. I drew the chart in November, and this was my entry point from the chart in November. So it is tradable. It is investable. And we got all these opportunities wrapped up. All right, I feel like I'm talking forever. How about we get started? How about I share my screen? Actually, I'm going to try something new. I'm sharing my screen with me in it. Can I do that?
Yeah, let's go ahead and rip it there.
Okay, so let me see. Hopefully I don't mess this up. If I do, I will try it again. What are you guys seeing? Is Rodrigo, can you tell me, are you seeing my screen and a little window for me?
Yeah, it looks like a chart, but that's on the webcam though. It's not the screen.
Okay, so it's not working. We'll go back to sharing normal stuff. Let me reshare. All right. I'll share this one. How about now?
Yeah, that's.
There we go. Back to normal stuff. Okay, so I'm looking at ARC-F just because somebody just asked me about ARC-F. So I did my best at drawing the forecast. I think it might stall here a little bit. It will follow markets. It should find footing. And is this the bottom? What bottom? So this goes along to the big picture of stocks. It's important to note here that there has been a disaster in the small cap-ish opportunity. So I call them, it's like a vortex of selling from the highs of last September, November, last fall. The market decided that they hate everything that looks like ARK could be interested in. PayPal, Square, Baba, JD, and anything that has high growth and maybe high spend or maybe not. Some companies are stuck in SE, jumps to mind. Anything like that. Coin, it's been just straight downhill, right? Every effort to stabilize has been another trigger lower. This looks like the best one yet. And let me see if I go to a weekly. Okay, so this was the pandemic crash. We are below the pandemic crash. So even if you say, oh, they did too much, well, they're doing too much here as well. So I would legitimately say that this is the best effort to stabilize in ARC-F. And here's another statement that is like not quantifiable, but it's an intangible. I think people got too comfortable shorting these good names. Why do I say this is a good name? Not because I'm a fan of ARC, I am not. Because of the top 10 are quality stocks, including Tesla. So you can't short Tesla too long. And you're going to get caught too short one time. If you've been shorting this for 6 months and gotten comfortable in it, just like the people that had been buying it into high heaven and they got too comfortable into it. I think they're going to make the same mistake on the way down. So what does that mean? I would be looking for longs rather than shorts, and I would be tactical about it. If I want to invest in it, I would take a bite and not all in, leaving room just in case we haven't found a bottom, re-engage lower. This way, I'm managing my risk ahead of time to find a better entry point. So if I didn't nail it at 16 and it collapses to 12 and I get in at 12, so okay, I got in at 14-ish. Good. As opposed to going all in here and then it goes to 12 and now I have to double my problem by buying more. No, go half and add the other half. Average in, never average down. Averaging down is a horrible idea. Averaging in is very, very smart. Okay, so the opportunity comes if they take out a 19, let's go 20, round number. It's 19.7 or 19.8. If they take out 20 on a 2-hour basis chart, and so let's say overnight it holds 20, and then the markets rally a little bit to help it out, I think the rip-roaring rally is going to stop a lot of shorts in a violent way. I don't know how much shorted it is, so we can find that out later if somebody wants to look into it, but it could skyrocket. So I shouldn't count on that. I should just avoid the mistakes. 1, stop shorting so aggressively. 2, be tactical. Don't go all in. So those 2 mistakes will save you on either way. If I wanted to bet up on it, I would take a small position using options. There are several ways of doing that. On a bad day, I would sell a put to own shares or a put spread if I didn't want to commit to that. On an up day, I don't like to chase, but the way I would chase it is I would buy a debit call spread. Buying calls works, but the VIX is very high. And that means all the calls I'm buying are expensive. So if I buy a call spread, I'm spreading that risk and eliminating the expensive part, because I'm buying a call and I'm selling a call. They're both expensive. They eliminate each other, that expensive part. So I'm buying a going rate debit call spread that would allow me to double my money. If I buy it at current price, I can double my money. Then it comes, how far out in time do I do it? I don't do it for this week, next week, or thereafter. It's going to cost the same. So why not give myself a month or two? Go out to August. This way, if we do rally by August, you double your money. If not, you lose a little bit of money. That is the non-violent way of trying to make money, a swing trade opportunity for the normal folks that have a job. I'm a slowpoke. That's my style of trading. I don't like to go all in because I'm helping 300 people live and more non. I'm liable to make mistakes. So I would rather do something that I don't have to babysit. So if I sell a put spread at the lows, I don't have to look at it every 5 minutes. If I buy a call spread out 2 months, I don't have to look at it every 5 minutes. If I do both, I'm really long and I don't have to look at it at all. And so that's the kind of thing that I favor. And I usually write it up. All right, so that's ARC-F. And that's an introduction as to what we do here. Simple as that. Little things like that. We discuss ARC-F like this. Suddenly we have a trading idea. So I think there's going to be resistance, but I think there's also the opportunity there, and I would want to be respectful of it. So the person asked me, he's new. Turns out that he's Lebanese like me, grew up probably in the same part of town. About the same time we immigrated to the US in the high 80s. So I felt kinship, and his first question was this. So I shared this. I said, if it dips a little bit, I would be a buyer somewhere here. And by mean, a buyer means however you trade. You buy shares, that's fine. You buy calls, that's fine. You buy call spreads or selling put spreads, that's fine. However you do it. I think there's a support. And then they meander and take this out. I put it here because that's where the neckline is. I prefer to wait to here. So I would put an alert here and say, good news are happening, overcoming prior fail. These are notes to myself, so I don't care about spelling. And now I know that, 22 is doable. I should add that there too. Doable. So it is, that's where it's going to stall again. Why? Look at that. That's a giant loss. These are not coincidences. You lose support, you try to gain it back, you don't gain it back, you go down, now it becomes a wall on the way up. So they can take it out, but maybe it takes two chances. So if I were to see the future, if they get here, they dip again, and then this will be their gateway to a really nice improvement in behavior. So this one, then that one, if we go there. Otherwise, stop out below here. Whoops. I would stop out. Because I don't want to know what lies below 14, maybe 12, 11, 9, I don't know. I doubt it, but I don't know. Markets can crash. Okay, so where do you want to take this? Do you want to hit tickers and give them the taste of what we do every day? Or do you want me to go into the usual, hey, if you're starting to trade now, here are a few things you want to know. Here are a few things you need to add to your toolbox to become, to trade like somebody who's a professional. Like there are some things that pros do, the successful traders do, not necessarily people who actually make money only from trading. A pro-like behavior. Actually, I'm going to do it anyway. So pro-like behaviors. I'll tell you one thing. It is here. Maybe I can. So it all starts with how you set up your risk, how you define risk, and how you set it up. So I'm going to get a little trusty pen and forget the overhead things. I can explain it well on the fly in plain, simple English. So if you wanted to discuss risk, and if you want to do it very well for that works for options, first you have to break up your risk into a couple of different components. And believe it or not, every time I get somebody that comes to me and says, I'm in trouble with a trade, it's always because they didn't do these two things. And that's where it starts. If you start it right, then you're less likely to have the problem. So you play defense by proper offense. Because if you set up your offense properly, setting the trade up, your defense can go home. You can have it on call because you're less likely to make a mistake because the opponent, the other side of your trade, is probably a normal person who doesn't do this right. So first, break up your risk into two ideas. One, how much can I lose? And this is not the part you manage, because if I ask you, how do you define risk? Everybody gets this part right. How much you lose, the risk involved, and whatever. Everybody gets this right. But this is not a part you manage. That's, you decide, you sit with your family, they tell you, okay, it's okay to take $1,000 risk on this trade. You make the decision and you move on. And on to the second part, which is where all the problems start. Okay, so in options, the question is, where do you put the risk? Which really means, what are my odds of winning? Okay, that's the part you manage. How so? You risk $1,000 and you say to yourself, I have a 70% chance of success. However you do it, you determine that number. I'll give you a way to do it that is not a guesswork, it's actual math. But if you're not doing options, you have to guess. You buy stock, you say, ooh, I think I have an 80% chance because of blah, 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 blah. Your opponent is saying, you're wrong. I'm selling you the stock because there's no way it's going to happen the way you're saying it is. But you give yourself a percentage. So that's the part you manage. Let's say 2 weeks passed. Let's say you took it for an earnings report and the earnings come out and nothing happened. That out. The reason's gone. You're out. You reassess that percentage and you decide whether you should get out or not. So when you're managing risk, that's the part you manage. What are my odds of success now versus when I started the trade? Have they improved? Have they deteriorated? And if they went worse, how far worse? Far enough for me to say, oh, okay, I'm done. So for me, it's easy math. I get a question, hey, I'm holding such calls, this call in Apple. What do you think? I said, don't ask me what I think. Let's go ask the market makers what they think. And we'll go look at one column, and it's called the delta. You can read it, and that's what the market maker thinks you're going to do. You got a 15% chance. You got less than a 5% chance. Then it's a no-brainer. Close it. Save the money that's there. Deploy it somewhere else where it's going to make you money. Otherwise, you're dooming that soldier to die there. They're injured. They're going to die according to the statistics unless you do something drastic and trying to deploy it somewhere else. Okay, so it's as simple as that. It's really as simple as that. So that is how you manage risk. So if you take that mentality for setting up your trade, proper risk size, not all in these days. The VIX is 27. Proper risk size and proper assumptions on okay, how likely am I to win or lose, and you have to track that. And when that likelihood goes below your expectations or your tolerance of risk, you should exit, win or lose. Don't say, what if it turns? What if it doesn't? So I would rather take a small loss than take a full bath, even if I, in hindsight, was like, oh, I didn't need to do that. Maybe it would have worked anyway. So that's step one. The proper defense starts with a proper offense. Okay, strong defense. Successful defense starts with a proper offense. That's what I'm trying to say. So that's setup number one. Okay, now within that, how do you deploy the trade also determines if you're going to be in trouble or not. So let's say price is right here, and you think that price is going to go to here. Okay. Now you go and buy a call up here, and you choose whatever time frame you choose. If that delta for that call is below 0.2, I wouldn't do it. Unless it is a specific lottery ticket because you see something like you see this as an 80% chance of happening and you know it's going to go there, then that would be a smart thing. But you know that you're buying something that has very little chance of succeeding. So your lottery ticket on purpose. Otherwise, the proper thing to do is get lower to current price, pay up a little more, and get like a 0.35 delta. I'll show you what that means. So I'm basically saying, when you set up a positive or a trade, calls or puts, don't always go for the cheap stuff. It's cheap for a reason. Pay up a little more and do fewer contracts. Let's say this was $200. Your bet was 10 times 0.2, so it's $200 out of pocket. I would rather risk that $200 on 3 contracts down here. They're going to win me just as much money and have much better odds. The odds for these guys are so much higher than the odds for these guys. So I'm sending troops to die, most likely, statistically speaking, versus I'm putting troops that have chance of beating the enemy. So I only need a small rally to make money here. Here, I need a big rally, less likely to happen. So if you set it up that way, if you're risking $200 up here, I would rather risk the $200 down here with fewer contracts. That's it. So better odds is the proper way to do it. But there are exceptions. Like I told you, I bought a 2-penny call a couple of weeks ago, and it went to like 15 or 20 cents. I can't remember. 13 to 20. I can't remember. So by design, I knew that they were going to jump up within hours. So I bought that penny because I'm only risking 2 cents. So that was the different specific scenario. Okay. So these are habits that successful traders have, whether they know it or not. They immediately assess that they have that number off the top of their head. Everybody has, okay, I risk X number usually when I take a trade. And they know this number, and even if they don't put it on paper. And then how they do it, they have a system. And I'm telling you my system. If I'm buying, calls or put, buying, I choose higher delta than normal. So I want 0.35. So keep that in mind. 0.5 is a coin flip. Okay, so we're not about coin flips. Let's see. I know. Okay, this is a trading platform from E-Trade. I'm not recommending it. It's a good presentation one. Where are we at? XLV. How about we go to Apple? Everybody knows Apple. I always fall to it. No. 20. Okay, how about we go to August? Slow it down. Okay, August. All right, so if you're not familiar with options, this is what they call an options chain. I chose Apple. I call that the underlying. And quick lesson about options. Everything on this page, it's a bunch of contracts. What are options? Lesson number 1, they are contracts. They have a buyer and a seller. And just like every contract, there are terms to every contract. You enter into a contract in real life, there are terms, time, cost, price, and all that. So in this case, time is August, 54 days. This is the middle of August. I want to say the 19th, not sure, 15th, 19th, something like that. So 54 days from now, all these contracts expire. So the deal is there's a buyer and there's seller to everything. So if you hear on CNBC, they're saying they're buying the blah, blah, blah. No, they are transacting the blah, blah, blah. There's a buyer and there's a seller. They're assuming it's a buy because based on how the transaction went, to them, it sounds like the buyer is smarter than the seller. I don't know either parties, therefore I don't assume. But it is useful information, and we make a lot of money trading that mentality and going counter trend. So anyway, time, 54. That's one term. Apple, that's another term. Quantity, 100. Everything I do here, one contract. If I trade one contract, that's 100 shares. Everything on here, every line contract represents 100 shares. Everything. So now we come to price. Look, we can choose whatever price we want. But you're still saying, what the heck are they? It doesn't matter. I'm telling you the terms. Everything here is a contract representing 100 shares given to Apple at different price levels. Okay. What they do, it doesn't matter. It's just a contract. Okay. They come in two flavors. Puts, everything on this side, they're puts. Calls, everything on this side are calls. They're not bearish and they're not bullish. Both are both. It depends what you do with them. In fact, there's only one scenario where a put is bearish, and same with the calls. So people say, oh, puts are bearish. No, they're not. And I'll explain it to you in a little bit. All right. So what does it mean to buy a put? Okay. So if I had Apple shares, if I had 100 shares and I wanted to protect them, and let's say I was fearful of the next 30 days, as I can be, and I want to buy some protection. So I say to myself, okay, I'm willing to lose money. I'm willing to stay long Apple for as long as Apple is above 125. Below 125, I want to be out at 125. So what do? I go buy insurance. If I buy one contract at 125 for August, it's going to cost me $250. $2.50 times 100 shares. That's $250. Remember, everything is 100 shares. So money goes out of my account, 256, but then now I can sleep tight knowing that if Apple goes to zero, I'm guaranteed a sale at 125. So how is that not bearish? Well, if I was bearish, I would get rid of Apple shares. I wouldn't spend money to keep a bearish stock, right? So I'm not bearish. I'm bullish. I'm just worried. You have cars, you buy insurance on the cars, not because you hate it, because you want to drive it and own it. So you buy insurance and you don't cry about it if you don't crash your car. You didn't waste insurance money. You just didn't crash your car. That's good news. So it's not bearish. Well, what about the seller of that insurance? Okay, so the seller of that insurance, what are they saying? They're saying, hey, if you want to sell your shares at 125, I'm a buyer for the next 54 days. Please give me your shares at or below 125. Please do it. So they too are bullish. If they were bearish, they wouldn't do that. Nobody would say, I'll buy your shares if they hated them. So the buyer and the seller of that put, they're both liking Apple at different levels. So bullish, the whole thing is win-win, and the broker wins as well. So that's the description of a put. What does it do? The buyer of the put, the person who wants to protect their shares, buys the right to sell their shares at a certain price. They don't have to do it. They just have the right to do it. So don't let it expire in the money, by the way. You will lose your shares. So it is saying between now and 54 days, me, the buyer of that put, I have the option to sell my shares at that price. I don't have to, but I have the option. Let's say it falls to 123 and you say, I paid 250. I sell them. I still lose 50 cents. Nah, I'll just keep my shares. I don't want to. I don't want to exercise my right. So they closed the position. They wasted some money, but at least they had the peace of mind for the time they owned it. So that's a put. So the only scenario where a put is bearish is if I buy this put and I don't own shares. And by the way, I don't have to own shares to do anything on this platform. Nothing. I can buy and sell puts and calls without owning shares. I do not need to have shares. So if I buy a put and I don't have shares, the only way I can make money is if Apple falls. Think about it. Look, current price is 141, 142. Current price is here. Look at how expensive that put is. They get cheaper as you fall away from current price. What if price falls? Then these will be as hot as these. And the chain gets hotter the lower the price falls. So if I'm bearish Apple, like I shorted Oxy by buying one of these at 66, and Oxy crashed into the 50s. So I paid, gosh, I can't remember. It exploded. It was like a 6x. So if I paid $2, it went to like over 10 or 11. That's the idea. But you need a crash, and quickly. So that would be a bearish position. So if I buy puts in anything and I don't own shares, the only way I can profit is if price goes down. Okay. So, or implied volatility explodes, but it's a different conversation. What do I mean? I'll tell you a scenario where I bought puts on GME when it exploded, when it went crazy. I made money on the way up. The stock was up like 50%, maybe 100%. I made money because everything in this platform exploded in fear. And the implied volatility, the column right here, you can't see, it just went to the roof, through the roof. So everything got expensive. And that was the only time in my life where I've seen puts and calls green on the same day. Puts and calls. I made 25% on my puts where I should have lost my shirt. And I didn't, because of everything got exploded. So don't worry about it. If you know what I'm talking about, then great. That's a good topic of conversation for people who know options. All right. So what about the call side? What do they do? Okay. I don't need shares in order to buy a call. That's how I get shares. Let's say I want to buy 100 shares of Apple. I don't want to spend 145 times 100 right now. That's a lot of money to risk, but I'm willing to risk a little bit. So I'm willing to risk $600 for locking my price. So if I lock my price at $600, that means in the next 54 days, I am reserving my price at 145. So if Apple goes to 160, I'll call up my broker. Can you please give me shares at 145? I paid for that right. Okay. So in this case, if I buy the call and price rallies to 160, I might consider just selling the call, because just like buying the put to make money off of a price drop, buying a call, I can make money off a rally. If I buy this call for $6, I'll give you an example. I bought Palantir, $8 call for August, PLTR. When it was down in the dumps, I bought this call right there. I bought this call. Okay, so at the time it was $1, 1.05 to be exact, I think. And now it's $2.60. So I started out with $100. Now for every contract I bought, I have almost $300. That's an incredible win. Why? Because price soared, right? So on Friday, I sold 1/3 of the position. So actually a little bit more. I sold enough to make it house money, pretty much. So I can let it run, this one. And for as long as Palantir is rallying, I'm making more money, because look how much more it can go. At some point, I will book the profit and roll it into a different position. So that is how you make money off the call. I didn't buy shares. I have no intentions of buying shares. I just wanted to make money off of the call price action. So I bought a call for $1, knowing it was pretty darn cheap and the stock is pretty low. And if we get a bounce, I'm going to make money. We got a bounce. I made money. I can just exit, not having to ever buy a share. But if I really wanted to own Palantir at 8, I would call my broker and say, please hook me up with my shares at 8. So I would wake up, this position would disappear. The money I paid for it, which was $100, would disappear because I paid it. And now I own shares that are in my portfolio at a cost basis of 8. But I did pay $1. So in all fairness, it's really 9. So right. Now anything above 9, I'm green with Palantir. So I own shares on out at $9 cost break even basis. So that's how some people use the call. I like to buy the call. If I make money off of it, I'll just sell it.
Right.
Okay. I did the same thing. I would have done the same thing with Upstart, except I chose to buy shares in Upstart because of the time element. And it paid so well. I bought them when it collapsed at 36. I decided to buy shares. Why? Because I felt it was low enough that I didn't want to have the time element be my enemy. When you buy a call, it's not like buying shares. You're bound by time. And $100 on calls I can spend, but Upstart has much more expensive premiums, so I didn't go the same route there.
Hey Nick, really quick here before we get into it, there's a couple questions here that the the people here watching have been sending about the chat room. So let's go over this stuff really quick before we can get onto the session here. By the way, thanks a lot for the questions, folks. So does Nic Chahine go over the member trade ideas? Yes, that's a regular daily occurrence. Are the sessions on Sundays recorded? Yes, they are recorded and they are posted in the chat room as well. Does everybody that joined get a free laptop? Yes. Chat room schedule Monday to Friday, 8:30 a.m. Eastern till 5 p.m. Eastern. And then you have the Sunday session, which is from 10 a.m. Eastern till 12 or sometimes a little bit longer Eastern time as well. Money back guarantee, 7-day money back guarantee. And the price at renewal is going to be the same as today, 70% off till midnight. And last question there, is it mobile user friendly? Yes, you can pull it up from your phone, laptop, anything that has a browser, your Chrome or whatever you use. But Nic has been adding a lot of new things. I know that it didn't have the live sessions, the live webinar. That's something that Nic added out of pocket for you guys, and also the Sunday sessions as well. And now crypto too. But I mean, so is there anything else that you're planning on updating there, Nic?
Sure. You bring it, we'll add it. If we can make money off of it, we'll add it. I'm not one to shy away from hard work. My neck is struggling because of it. Seriously, now my hand is numb, but I keep changing my posture because I'm sitting longer and longer. But if we need a new tool, we'll bring it. If we need to learn a new aspect of investing, we'll bring it. I'm reading a whole bunch of stuff about stuff I usually don't care about, like what Jamie Dimon said. I don't give two rips about it, but everybody's asking me, so I have to go educate myself. If I can give you a piece of advice, turn off the news. Listen to the news for safety, like if there's a fire around you or something, or a virus or something. But for investment purposes, you should turn off the news, because the news is designed to elicit your emotions. Would you watch the news if the newscaster comes on and says, nothing really happened today, but we're going to spend half an hour talking about it anyway? You would shut it off, right? So it's not evil, but in order for them to make money, they need to engage your emotions one way or another. So they say things like, don't leave us. We're going on commercial break now, but don't leave. Make sure to stay here because we have so-and-so coming after the break, and you won't believe what they have to say about Apple. You stick around and they come out and they say, Apple is a great company. I was like, what? I knew that. Yes, but they engaged you emotionally, and they create a mountain out of a molehill. Like Jamie Dimon, when the stock market was already falling a couple of weeks ago, what does he come out and say? He comes out and says, oh, remember how I said we expect a debacle in the stock market or a storm? Forget about it. It's going to be a hurricane. The stock market tumbles. Go read his comments on Friday. It's criminal. Now he comes out and says, oh, we can have a super spike of sorts. I don't know the exact words, but that's what they're telling me he's saying. Well, it's like, what the fudge? Well,
basically, Nic, what? Like new traders, you have a special message about, like, trading the news, and because that's something that a lot of new traders fall into, right?
Everybody falls into it. We are human beings, and we have that innate. It keeps us alive in the wild. If you've been here before, you've heard this example. It's ridiculous, but it's totally true. You've heard FOMO. Let me explain it to you. I'll explain it to you from a personal story. I was with my son, waist high in the water. We were body surfing, and we see a barracuda bobbing up and down, maybe 20 feet away from us. And, I'm not that scared of a barracuda, but it's a pretty scary looking fish, right? So, and then suddenly I look around, it's like, wait, it's gone. And then it's coming straight at us, right? So I start laughing and I turn around and I start running. My son and his friend were starting to run with me. And pretty soon a lady was like, we were coming up on her. She turns around and starts running with us. While we're running, she's saying, what are you running from? So that's what happens with the FOMO. We have an instinct to run with the people because that's how we stay alive in the wild. Well, in this case, she should have been running the other way around. Maybe I dropped a mask or something. You know what I mean? So you have to run back into the problem area to see if there's an opportunity. Don't just run. Don't assume that everybody's doing the right thing. If everybody's doing the right thing, there wouldn't be a stock market. Think about it. If a casino player, if everybody's great, the casino wouldn't exist. The reason why it exists is because the casino wins almost all the time, and it allows enough people to play and win without breaking it. Same with the stock market. It's out to screw everybody, but a few people that get it, they know what the parameters are. So with the options world, it's so easy because it's math. So I know for a fact that there are trades that cannot win unless the casino loses. I don't want those trades, like buying a straddle. They don't work on an absolute basis. They almost never work, but when they do work, they work well. So they are a low odds trade that I avoid. They have a particular use for it, but it's rare. So selling a straddle works, but I don't do it because I don't want to sell a naked call. So if you don't know what those are, don't worry about it. What I'm telling you is, if you understand my setups, here's what I'm telling you. My setups never include the market maker losing money. They always account for the market maker. Hey, you can win and let me take the scraps that you don't want. That's basically my attitude. And my scraps are 12% to 24%. And now they're daily. Let me show you something. This is like the newest honey hole. If you can be in the live room, we have a 25% opportunity every freaking day, and you don't have to wait for an overnight hold. So this is the SPX. This is the S&P index. Everything is priced off of that. When you buy an SPY, it's tracking this. The futures, they're tracking that. So this is the cash settled SPX index. Look, there's a contract that expires every day now. Every day. Thank you, gods of options. So now, from the moment the market opens, and I love it when we open down big or up big, because then I can throw my bet, my extreme bet in the morning, and then we rally back and I'll throw my other extreme, sit back and wait, 25% by the end of the day, done. On Friday, I was only able to get 11 because I was, it opened up and never dropped really big. So I sold the upper end at 39.25 SPX, and it closed at 39.11. You see it? So I won by 14 points, but it doesn't matter. I made 50 cents, which is 11% yield on my trade. So if I did 10, I made $500 out of nowhere. On a given day, it's double because I'm able to do also the same bet on the other side. Well, I couldn't do it on Friday. I shared it at the open. I said, this would be the viable one to do right now. And on the dip, I'll do the other side. And we never got a big enough dip that gave me confidence. So I didn't do. I said, I'm not adding drama to myself. I could have, but I didn't. So I forego that. So the opportunity to profit from the live room is tremendous. And if you and with options, it makes it real easy if you know the parameters of the casino. I keep calling it the casino. It's not gambling. It's using statistics in your favor. Let me give you an example. So going back to Apple, I put it in plain, simple English, show you to understand it. Nobody teaches options like this. You go to options, what's the first thing they're telling you? They're telling you most options expire worthless. So you should stop listening and say, where's the room that teaches how to sell options? That's the room I don't want to be. Because if everything dies worthless, who wants to buy the stuff that dies worthless? I want to be selling the stuff, right? So even then, there are parameters. So think like a market maker. Let's work with the digits, okay? And then you go to delta. Define delta for me. Go look it up. It's so confusing, you wouldn't be able to put it to work. Look it up, Google it, and come back and listen to my explanation of what a delta is. I'll tell you my explanation. The delta is your odds maker. What? Yep. Look at the delta. You can tell what are your odds of success. For example, if you tell me I'm buying Apple stock and I ask you, what are your expectations? You say, I think it's going to be 170 by August. I say, okay, let's go see what the market makers think of that. They rarely lose, the market makers. This is 170. This is August, right? You think it's going to be at 170. Let's see what they think. Move over to delta, 170, 0.06. Is that a big number or a small number? That's a small number. What is this saying? Let's put it in plain, simple English. There is very little, that's a very little number, very little chance Apple will be at 170 in 54 days. That's what the people that make all the bets, that's what they're telling you. There's very little chance. It's possible, but you're, buying a lottery ticket. That's why it's 50 cents. Okay. If you hit big. There are other people that think so, 20,000, 14,000, 23,000, 11,000, a lot of people, but I don't know when they bought that. I mean, we can find out later. So it is possible we will get a rally, but how about instead of buying this thing for 50 cents, let's say you wanted to do 10. So that's $500 out of pocket. Earlier, I told you I would much rather take the risk closer to current price, right? Higher odds of success. So this is 0.06. Why not take one that has a 35% chance of success and pay $400? Take one instead of 10 here. I would take one here. That $400 can turn into 800. If it rallies, I can double my money versus this one has very little chance of success. This one has pretty darn good chance of success. Same money out of pocket, better odds. So if I were to buy something, I'm not buying this, I'm buying that. I do make exceptions. I already said that. But as a habit, I buy quality deltas. I sell crap deltas. You want to buy this one? I'll sell it to you. That's how confident I am. It's probably not going to get there. Same with the puts. If you're shorting Apple and you're buying this $1, the $110 put to make money, so you're only spending $100 to short Apple. I would rather you buy this one and pay $500 to short Apple. If you're going to do 5 of these to spend $500 out of pocket, I would much rather you buy one of this or that. It's same out of pocket expense, way better odds of success than this almost nothing. Very little chance Apple is going to be 110 in 54 days. That's what.
Hey Nick, really quick here, just want to give a shout out to our newest member, Ricky. Welcome to the family. Let's go.
Pew, 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 Ricky. No, you don't have that. Okay, so.
Oh yeah, you didn't hear it?
No, I didn't hear it. No.
All right, let's give another one here for Ricky. Let's go. We're not gonna leave him.
I didn't hear it. I made the noise. That's good enough. So the idea is to be realistic with the don't go against the market makers. If Apple is here, that's outside of the scope of the market maker, and they're going to do their best to make you lose. And here, if you buy this one, they're going to do their best to make you lose because that's how they lose. If things go out of control one way or another, they lose. They price things so that if price is between here and here, they make money. That's all they need. They need price to stay plus or minus $15 for 54 days. That's a rough estimate. I'm doing air math here. So if it goes to 125, they're okay. If it goes to 160-ish, they're 155, they're okay. Anything outside of that, it goes, we did not have planned for that. So don't buy anything higher than that. Don't buy anything lower than that. Sell those. So if you want to sell a put spread, go below and sell a put spread. So understanding the rules, you become like that little fish that swims under the shark. Nobody's going to touch that fish. It's safe because it swims under the shark. Assume everybody's out here to screw you. That's what you should assume. In fact, if you want to rule as to where price is going to go, where can price go and expire to make everybody lose their money? As many people to lose money as possible. That's where price is going to go, because it is somewhat of a rigged game. It's a well-organized market. JP Diamond helps it. Words from him. Those people on TV on CNBC, they're all in like sync. They're not in collusion. They don't like meet or anything, but their goal is to make this whole system work the way it is. So it's not so much rigged, but there are rules that you should follow. And those are the ones that we follow to stay on the right side of the formula. So if you were to learn crash course in options and you had like 3 things to learn, Delta would be number 1, because that tells you, like if somebody says, I'm holding a 160 call Apple for August, what do you think? I'll say, well, let's go. They tell you you have like a 16% chance of success, 15 to 17. That's not great. I said, keep an eye on it. It's getting to be on the low end. It's making me edgy. I would rather save the money and move it lower if you still want to be long. Or if the reason why you took a long is no longer there, you should just get out. So that would be an answer. If somebody says, I would like to sell a put in Apple to own shares. Okay, great. Then you pick a spot where you like the stock, and you pick a stock where you absolutely don't mind owning shares. So for those of you who don't know options, let me show you a ridiculous way to illustrate how easy it is to make money if you're just a little bit smart. Let's go to Tesla. All right, so I'm assuming you guys like Tesla, and let me ask you this: if I know I can't see your answer right now, I don't have the chat room open. If Tesla falls to 600, would you love to buy it? It's up here now. Okay, so let me show you a ridiculous number. Sorry if you can hear the revving. That's my son. Okay, how about this? Would you take $1,000 today if you promise to buy 100 shares of Tesla at 350, half price? Would you take $1,000 today? On Friday, somebody would have paid you $1,100 on Friday for you to promise to buy their shares at 350. 350. It's half price from now for 117 days. So the way I would do this, I would sell one put. I would never sell a put unless I want to own the shares, okay? I would sell one put. And what happens? The order comes out. I get money. I don't spend any money. $1,100 goes into my account. The platform reserves an amount of money. It's significant for this size stock that says, hey, you promised to buy shares. We got to make sure you have enough money to buy shares. It wouldn't be enough to buy the whole shares, the amount. It'll be cheaper than buying 100 shares of Tesla, that's for sure. But they do need a hefty sum against it. And all you have to do is just wait. You either get given shares at 350, put shares at 350, and then what happens? That trade, which would be showing a lot of paper losses, would just go away. You get the money, you keep the money, but all the losses on paper would not materialize. They would disappear as long as you don't buy it back. And then you end up owning shares at 350. You break even at 340, actually 339 and 35 cents. Not a big deal, right? So that's how you can buy Tesla without buying Tesla. So what if you don't have what if you don't want to commit that much money to the trade? Then you would sell a put spread instead, which would also bring you money, less money. And you commit to, like, if I do this one, it's $10 wide. I make $100, and it's basically a 10%, give or take, reward. And the only thing you need is Tesla above 380. Tesla above 380. So if I do 10 of these, I'm collecting $1,000. How much am I risking? $9,000. So a $20,000 account can do this and allocate 50% into Tesla long for the whole year at a huge discount. So the odds of success here are high. Why? Look at the delta. Look how low the delta is. This is the market maker saying there is virtually no chance. That is super low, 0.06. Virtually no chance Tesla will be here in 117 days. It is possible. Therefore, don't assume it won't be. But there's really very little chance. Look, there are 10,000 contracts here. There are some people that think this can happen, but we don't know exactly when they took them, right? We can find out, but I don't really care. Statistically speaking, this is a viable setup. Okay, so now we've gone through. This is an explanation as to how somebody can make money by other people panicking. I'm going to show you my real life example that I shared during the pandemic. AMD crashed just like every other company. And let me see if I go to Pandemic Weekly. Okay, this was the pandemic crash right there, right? We had an all-time high that was super high. That was stupid. And then we crashed. First stint down. AMD fell into the 40s. I know AMD inside and out. I think Lisa Su is doing a great job. The P&L is awesome. The financials are awesome. The metrics are reasonable. Growth is phenomenal. So I was like, okay, so if the market is going to recover, AMD will recover with the market first thing, right? So I went out there to October and I said this. I sold a put in October at $22 right there. I said, anyone wants to sell the AMD shares at $22 between now and October, that was here. That's one. I'm yours. Give me your shares down here. They paid me $2,200 to do that because they were panicking, right? My break-even point was $20. I sold it at 22. $20, I would have broken even. And then AMD popped. So this made me money. It got cheaper. I didn't buy it back. And then AMD did this because the whole market went through the second wave and it was a disaster, right? So I said, I'm going to do this again. I didn't close it, but I came to July and I found somebody to do exactly the same at 20. So I said, any of you want to sell me your shares at 20, I'm yours between now and July. Another $2,200 for that. And that was number 2. And then AMD did this. So what happened? My money here died. I collected the money. They bought insurance. They never filed a claim. I just made money out of thin air because everybody panicked. See, I ran into the room. And that woman that ran with me, she should have ran back to see if I dropped my glasses or something. There was an opportunity when everybody was panicking one way. Instead of running with them and panicking with them, I ran into the area of problem and I said, do the math. Yeah, sweet. I'll take your shares at 20. Let's go. I mean, we don't have zombies coming into the street. It was a virus. So that was the right thing to do. I would do it again. And I think AMD will have another moment if they don't recover this. This is a side note. And this, AMD will be here probably this year. Something will cause it to be here. And if they do, I'm going to be selling somebody puts down here and saying, hey, if you're going to give me, I'm going to do these 2 things somewhere down here. I'm pretty sure I'm going to be able to sell $30 puts in AMD when, everybody's going to be running one way. Guaranteed. I guarantee it. Look, they're selling rallies. So some headline is going to come out and cause it to come down here. NVIDIA would be like 120 to 90. Don't short it based on that, but expect that it could happen. Don't short it. It's 2 different things. I'm not shorting, but I'm expecting. Same as Bitcoin. I expected 19 and 20 from November based on exactly the same chart. This is Bitcoin 46,000. They tried to hold and then they lost it. They recovered it for 48,000 and they lost it. They tried to recover that and they lost it. And then they triggered another one and they lost it. 25 was the last level and they lost it. Now they're bouncing off of 19. Now we're talking crypto. Focus, Nick, focus. Okay, so this is the concept. If somebody panics, you don't panic with them. You stifle your emotions down, your fear, your innate fear of missing out or running with the herd. Go where the herd is running from and see if there's an opportunity to pick up. If you listen to news, they're going to elicit their emotions out of you a lot more easily than you not listening to the news. I'm not oblivious to what's going on. That's different. What I do is I on Twitter, I subscribe to Reuters. And they send out every headline. Reuters and whatever that other website is called, Zero Hedge. So don't click on the articles from Zero Hedge. Take the headlines. Okay, they're not US friendly, but they are pretty good at breaking out headlines. Benzinga Pro, headlines right off the bat, right? Go with the facts. Don't go with the opinions. Don't read an article of what so-and-so thinks of the headline. Go read the headline and you determine for yourself what it means. And if you don't know, educate yourself. There's only a few things that matter in the stock market. 1, structure. There's nothing wrong. Everything is operating. 2, money flow. The Fed is trying to break that. And 3, sentiment. And it's wishy-washy because of the Fed. Those 3 things control price action. You make everybody happy, they're going to rally to high heaven, right or wrong. You flood the market with money, they're going to rally to high heaven because you can't avoid it. That's what happened in 2020 and 2021. $3, $4, $5 trillion. It's got to land somewhere. So those are the 3 things. If nothing is broken, and if money is still all over the place, read JP Diamond's. Somebody told me, he said, I was like, okay, I guess I have to read it now. So I went and read it. Somewhere there's a study now that there is so much money on the sideline. So that second part, the last time that happened was September of 2020. And in that, there was a big rally after that. The only times that were higher was 2008 after the crash and 2002 or 3. They were a lot higher. So everybody was hiding in cash. So we'll see what happens. So make your own opinions. Don't be oblivious to what's going on, but don't subscribe to the thesis. Don't read the articles. Just get the headline and form your own opinion. Like if you hear Pfizer got an approval, I stop reading. Okay, Pfizer had a favorable headline. So I go to Pfizer and see how I can trade that. I don't go read what somebody thinks, oh, that means I have to change my price target. It's hogwash. Have you ever seen anybody give you a price target before it gets there? No, they're always late. Very rarely you hear somebody say, I'm downgrading the stock going into an earnings report. Very rarely you see that. I've seen it maybe once or twice in the last year. Somebody comes out and says, before the earnings, I fear this is going to fall. I'm going to cut my price rating from here to here, and I'm going to downgrade it to sell or hold or whatever. You rarely see that. It's always, they've been wrong for 6 months, and now they have to reevaluate their price target. It's like 100% away from where they are. It's clearly not right. So they come out with a stupid headline. So make your own opinions. Okay, Rodrigo, what's next? What do you want to do next? Oh, I'll show you something. This is like the blurb earlier, I promise. Things you can do to level up, right? So common sense. No trigger, no trade. In other words, don't ever take a trade. Promise me that from now on, don't take a position without a real reason. And you saying, I think it was going to go up. That's not a reason. Why do you think it's going to go up? If you cannot explain it to me, why you're taking the trade, you shouldn't take that trade. Manage the odds. Be honest with yourself. What's the percentage? Remember the odds? What are the percent that I'm still right or wrong? And when you take a position, have an exit strategy in mind. Okay, if we get to here, I'm out. If I lose this much, I'm out. Have a strategy. Don't willy-nilly. And grow, meaning continue to learn. Collaborate means you join Nic, because we have 300 people and you need to trade not alone. I promise you, it's much more fruitful. There are people watching your back. Like Katya, I was saying fade, fade, fade. Katya jumps in. No. I see a sign of because of blah, 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 blah. Like, okay, thank God she looked out for us. And this is the trading platform during the day. I'm sharing my screen, hundreds of people here, 349 on that day. And then Wolf, sorry, Wolf, if you're here, I outed you. He says, darn near double my account this week. Love that. So it's not a one-off deal. Okay, so we didn't start on a good note with this person. I won't say his name, but now we're like, he does what I like to do. He knows exactly what he wants to trade, and he sells those cheap puts on bad days into great companies, to where the worst case scenario, you end up owning a great company at a cheap price, like that Tesla trade. It took me 8 months for me to learn your system, but I am now making 6 figures selling puts. I didn't even remember what it said. I'm not as conservative as you. I'm chicken. I fight for a sport. I have a red marks from yesterday's sparring session, but when it comes to money, it's I'm chicken. I take very conservative bets. I'm not as conservative, but I have learned a lot. Okay, so sorry, I didn't share your name, therefore you don't know who we are. Okay, so who is this?
Nic, and somebody here has a good question, basically saying that they've been trading by themselves, trying to teach themselves options. They've lost close to $45,000, and they really need, like a mentor, an educator. They're trying to asking if this is something that you can help with for risk management, that nature.
Can you read this? Can you read this? I just landed on this one, right? Hi, Nic. Before I joined your group, I made some unwise trades. Sounds like what you're talking about. I'm holding bags in DraftKings and a firm. How can I mitigate my risk or damage? So that's what we do. First, we stop the mistakes from happening. Second, we see if we can recover some of it and try to come out of it. Third, going forward, before you jump into a trade, discuss it with me. I may join you. That's why I want people in here, because I can't have so many eyeballs. I mean, I focus on a bunch of things, but I can't have the whole market covered. So if somebody has eyeballs on a company that I haven't seen, and they offer me an idea and say, hey, if they come to me and say, I'm looking to trade such and such company, how can I do it safely? And then I'll look at it, I'll provide my opinion on the company, and I'll provide my opinion on the charts and timing and method. So now your next trade, even though you had problems, your next trade is going to be much more structurally sound and fewer pitfalls. And to recover lost money, It's hard in hindsight. If you bought calls, if that person bought calls, it's hard. If that person got assigned shares, it's easier. Today, I had a person, long time member. I bet you 10 years with me, 10 years. I haven't spoken to him once, all via just one email a day, one email a week, maybe. And he likes to sell put spreads and puts and sell call spreads very out, very wide in time. So it is really good that he has his own system, but he got caught, assigned Roku and Netflix. There could be worse stocks to be assigned. Roku, I said, I don't have an issue. If I'm stuck with Roku down 20%, I hold it. That company is making money. As long as it's making money, I think the stock will rally if markets rally. Netflix, I said, he needs $240 in order to break even. I said, it can do it. It depends on how truthful the CEO was last time. In his earnings report, he scared the metics out of people. He said some pretty awful things. He said, we did badly. We're going to do way worse next time. And I mean like 10 times worse type of a deal. So he scared everybody straight. And by the way, I had a heads up on that. And I said, be aware Netflix can collapse in this earnings report. I said, I am really worried about Netflix because the CEO, the earnings before that sounded humble. I said, this is as cocky as a CEO as I've ever seen in my life, at one point saying only sleep is his competitor when there was Apple and Disney chasing him. I said, that guy is reckless. And then suddenly he's all nicey. Oh, yeah, bad things happen. I said, he's preparing us for a pretty bad news. And sure enough, boom. So if he was bluffing, then this one can be at 280 as a stupid reaction to his not so bad comments, because it's all about expectations, not results. The results can suck. If they don't suck as much as people thought, there'll be a relief rally. Take the advantage of it and get out of your problem. So if somebody expected absolutely horrific numbers, they imagine the absolute worst possible scenario. And then it comes out just bad. Not worst, nowhere near as bad as he said it was going to be. You're going to get a relief pop because Wall Street prices bad things like right away. So last time he said bad things, whoosh, sell everything. And now it's not so bad. They get a relief rally. Use it to get out. Don't use it to say, ooh, maybe it continues. Nope, out. You fix it, you get out. So I said, if I was stuck, I would keep stuck and buy puts to protect myself. Stop the bleeding. Spend a couple $100 to stop the bleeding. And if it collapses, I make money. Maybe I get even from a collapse. If not, I have a chance to get out even, risking $200 or whatever. I made up the $200. It should be enough, but I didn't look into particulars. So yes, we can help that. I don't have magic bullets. Sometimes you just can't. I even went as far as suggesting a strategy. I'm going to broadly suggest it, but please don't do it unless you know what you're doing. So if I have shares and I'm long shares here, and stock is here. And I just told you, you don't double down. Averaging down is a loser proposition. I don't know one successful trader, a pro, that is allowed to average down. That is a loser proposition. Trust me. You have a problem, you just made it double with no new information. What? No. So there is a way to double down in options that requires no money out of pocket. It is risky. Don't do it until you know it for a fact. I've never done it, but somebody in my group just did it based on my note, and they studied and they said, we're going to do it, but they know that they're taking the risk on their own. The idea is, if you've heard of a butterfly is a directional position. In this case, we're looking up, so we want to call butterfly. It's a complicated concept, but the way it happens is you buy a call, now you're bullish a stock. You sell two calls, now you're bearish a stock because you only bought one and you sold two. So if the stock rallies to high heaven, you start losing money indefinitely. That's not good. But to stop that, you buy a call above it, same distance between those. So you buy a call, you sell two calls, you buy a fourth one. So now you have two longs, two shorts. Maximum loss is out-of-pocket expense, right? So no issues. If the stock goes back to here, perfect. This is the maximum profit of that position. It's called a call butterfly. Okay. How can I modify this? to make me double down on my bet of being long shares up here. So how do I do that? I buy a call, I sell 2 calls, and I don't buy a third call, the third level of calls. Why? Because I already own shares. So the shares, the 100 shares I own are my call that I buy, but I don't need to buy it. I'm already stuck in the stupid shares. And this would be zero cost out of pocket because I'm buying 1, selling 2. So I spend money, I'm collecting more, so they offset each other. So now if the stock goes to here, I'm out. I exit everything at break even. So it's a tricky scenario. Please don't do it unless you know exactly what you're doing. But that's a way we discussed. So the only way I would double down, that would be the way I would do it. But I haven't needed to do it personally because I don't own shares ever of things I don't trust. So, but that is things, those are things we can try to do for somebody stuck. I offered it and a couple people bit, but they are good at options and they thought that was a good way to do it. So yeah, we can get fancy. I like to keep things simple. Call calendars work great. Put calendars work great. Diagonals work even better. Now they call them something else, like a poor man's covered call. Don't fall for that. It's called a diagonal or a calendar. Poor man covered call is so confusing. What do you call it on the put side? if you call it on the upside, cover call. Anyway, so the group effort produces results. The camaraderie produces safety in numbers, more eyeballs looking out for pitfalls, more skills. We have excellent chartists among our group, better than me at things, and me better than them at things, and the whole group works well together. More people are using my tools and their own tools and updating us live. So we make better decisions on a very short-term level, which makes us smarter on a mid-term level, and the long-term level is so easy for us because we don't take stupid risks. So
right. So
I invite you to join, and if you don't like it, the folks at Benzinga will give you your money back.
right, and Tim's asking a good question here. So is this basically for new traders or for advanced traders?
This is for everybody. If you're advanced, you're going to get into the live room and cannot believe the results. If you're new, you're going to get into the chat room and have access to all the videos and have a bunch of questions. You get into the live room, you're going to feel overwhelmed, but I'm going to urge you to stay and pick up on a few words that you don't understand and ask me sidebar, direct message me and say, what the hell is that? I didn't understand. What do you mean by this? It could be basic things. If you know me, I love teaching. I should have been a teacher, but for like a career, because I really enjoy it. So if you ask me a basic thing, I'm not going to say, oh, don't bother me. I promise you, I'll give you all my time. And if I can't find time, I will do a video off time and share it with you if I don't have it already. Like I mentioned, call calendar. I have exact concept of trades I did recently from Roku, from Zillow, from Affirm that would explain it with real life numbers of trades that we took overnight on earnings. So new people, I invite you to join. You're going to feel overwhelmed. You're going to feel lost. I urge you to stick with it. And instead of backing down, send me a stupid question, as stupid as can be. I will set you and we'll like level up immediately after you ask the first quote stupid question. We will level up. We'll get over that hurdle. It's repetitive. It sounds confusing, but the terms are repetitive. The concepts are repetitive. The videos say the same thing every time. So you will first, everything is foreign. Next, you'll learn one new thing, and then it becomes baseline, and then the baseline grows. And pretty soon you'll have a good grasp of everything you're reading and seeing and listening and hearing. So, and reading. Did I say that already? Anyway, so expert people will jump in. They love it. I had a few people that jumped in from a couple of other shows there. One guy sticks to mind, Brian Z. He loves it and he's good. And he came in, he probably is better than me at trading the futures or something, but he loves it because we're producing good stuff. We're keeping great levels intraday, and that's his speed. But if we're good intraday, we're pretty darn good midterm, like a swing trade opportunity for 3 weeks that I don't have to babysit. The only time I got blindsided recently was Snapchat, and that was thanks to that crappy CEO. You just reported earnings. There's earnings coming. What is the point of you coming out 30 days after you just told us how bad things were to come out and say, well, we think we're going to miss our numbers by a little bit? The stock gets collapsed. What's the point? You just penalize everybody within your group. Usually people buy insurance right around the events. This guy stuck it to them right in the middle. Nobody's prepared. If it's close to earnings, I would have been out of my trade. Nope, he stuck me. That's just bizarre. Anyway, so it was a credit put spread that went sour. But then I offered how to dance out of it. So if you want to know if you're ever stuck in a credit put spread, for those of you who already trade, so if you have a credit put spread, meaning you sell a put that puts you on the hook and you buy a put that limits your risk. So you collect money and here you're, in trouble, off trouble. So maximum loss is set and it's a finite amount, right? So price in this case was happy, went down to the toilet. So what happens now? Now you have a credit spread that's sour, maximum loss. It hasn't expired yet. This part is losing you a lot of money because you sold it, say, for $1 and now it's worth $10. I'm making up numbers. That number, you bought it, you paid 50 cents and now it's worth $8. So this one is making you a lot of money and this one is losing you more money. So the net is a loss. So it is Snap. So it's not that crappy of a company. He said we're going to miss the lower end of the range. He didn't say we're going out of business. So what I said I would do is I said I would sell this one and book the profit, and it's thousands, and say, give me the shares at 22. So the net profit from this, if I did the math properly at the time, was that I break even at between 14 and 15. And price was about 14 recently. So then if somebody did that, they kind of got out of trouble by now. So if they woke up owning shares at 22, they collected enough profits from this one that they sold that they broke even. Just close everything and you broke even, lost a little bit, made a little bit, doesn't matter. I've done this before with the letter X 2 years ago during the pandemic. I sold a $10 put. I collected money, but I also had a protective put I sold a $9 put and price was at 11, I think. Let's say it was at 11. And then I got nervous as soon as I sold it. So I bought a put at 8 and then price did this. It went to 4.8. So I was on the hook losing money from this one. I was making a lot of money from this one. Net, I was losing a small amount of money. So I was like every day waking up, please assign me shares. I can't do anything about it. I can't tell them to assign me shares. When you sell a put, you're on the hook. You're at the mercy of the buyer. So I was like, please assign me shares so I can unwind this whole thing for a small loss. Nope. 2, 3, 4 days. And then X had a washout drop below 5. I said, screw it. I sold my protection, made thousands from it and waited. Price started doing this. It got to here. I bought my position back for a little loss, but I made so much money from this one that the whole trade was massive win because somebody didn't want to assign me for some reason. So that's what I'm saying. Same scenario here. Went bad. I didn't panic. I maximized my assets. I managed my liability. I maximized my assets. I can manage my liability. Same concept. No panic. So that's what comes with, if somebody's stuck, they come to me, hey, what do I do with this position? I get all the information and I'll see if I can help out. Sometimes you just can't. You have to take the maximum loss. But sometimes you can. Like we were short a put spread in Shopify. I sent a trade alert with Shopify saying, I like Shopify. It's a tough trade because of the way the quotes are on spreads. They're difficult. So before the crash last 2 weeks, I sold a 295, 290 credit put spread and I shared it. I think it paid 90 cents. So 20%, give or take, yield on profits, on risk, if it won. And it came under fire, and with the market, Shopify fell to it and through it. And they said, what are you doing with it? I said, nothing. Now I have time on the clock and I believe in the levels. And I think markets are overreacting to headlines and they will bounce. And they did. So if somebody didn't panic, no harm done. If somebody panicked, they lost. So I meant to re-engage and I never did, which is shameful. because it would have been an easy win. Anyway, hindsight, right? That's okay. I'm not rushing to chase it here. Speaking, so if it takes that side, if it takes out 399, I don't think this will hold it. I think it goes to 480, but maybe on a dip. So don't go buy calls. Saying Nick said it's going to 480. I'm saying don't short it just because it's going into a prior fail. And if it does take out the prior fail, expect a big burst higher. And it won't do it alone, but it would be the whole market.
Hey, Nick. Joe has a good question here. He pretty much likes your analysis, but he doesn't trade options. He's wondering if he can join the room, even if he's just trading stocks.
I have people in the live room that do equity only. A couple of people jump in. One sticks to mind. I think Linda only does equity. She shorts and buys Google's and Amazon and Tesla all day. But the idea is that the proper time to enter and exit doesn't change. How you do it changes. So if Joe was it? If he comes to me and says, I'm thinking, what do you think I should do with Shopify? So I'll tell Joe, are you looking to buy shares? Or your own shares? What do you? He'll say, no, I'm looking to buy shares. I would say, you know what? It's going into a prior fail at 400. I can't promise you it will break out, but I can promise you that if it breaks out from it, I think it runs 40, 50, maybe $100, maybe in 3 days. So if you're dying to get long, ideally, I want to buy it on a dip. But if you don't want to miss out, if you usually buy 400 shares or 100 shares, buy 30 now. So now Joe has the opportunity to, he has knowledge on the charts. If he didn't know charts, I'm helping. And it sounds like he likes the way I look at charts. So if he needed that help, I mean, how much price do you put on that? That you can come to me 24/7 all year long and say, I'm looking to buy this much money into this stock. What do you think the chart is saying? I'll look at the options and I'll tell you where the money is. So I would go to the options and go look up Shopify. And if we're thinking the time frame is going to be August, I'll go to August. Let's go to July. It's more immediate. And then I'll tell you, okay, we could rally into 400 and then we start looking at resistance. It's not very busy, Shopify, so it's not the right example. But Apple or the SPY, for example, any busier ticker, maybe Snap, they will, the information in the option is gold because it's a heavy stock. Look, 60,000 calls right there. So if price comes up to here, it's going to stop dead in its track. And if you see a big position up here, you're going to find upside pressure into it. So there's information I can give somebody that trades stocks and equities or futures that doesn't trade options, that they get all kinds of benefits from it. He will be a stronger trader with the way he trades with my information.
And I think next week your best friend Jerome Powell is going to speak. Do you cover those kind of events?
Is he again? What the heck? Well, here's my take on Powell. He's as nasty as he can be right now to the stock market because he's bluffing. There is no way he can raise as many rates as he wants to, because if he does, he's going to create insolvency problems. It's one thing to break the economy and cause unemployment. It's another thing to cause a balance sheet problem like in 2008. He cannot raise rates with so much in debt. He will create a financial disaster. It's different than slowing down. So yes, I do cover that from the sense I don't trade headlines, but I'll tell you what the likely outcome is going to be and how it affects things. So any change from Powell, whatever he says is already baked. Anything new he says is going to be positive. He's going to have to backtrack. He's using harsh words because he knows he cannot raise rates without seriously creating a problem for the White House. And I'm talking like serious problem, banking problem. That's a different ballgame than having inflation. So here's the scenario. We have inflation, and they say because of supply constraints, right? We don't have enough video cards, therefore people are paying up double the price of a video card. We don't have enough pickups, therefore people are paying up $110,000 for a freaking pickup. I know that because my son builds them for a living. What a used Chevy top end pickup is $90,000 for a pickup. That is insane. So The supply constraint is creating a bid in the price. So he cannot control supply, right? So he's destroying demand. He's going to cripple our pockets. He's going to try to. He's trying to destroy demand to control inflation, not raise rates to control inflation. He's scaring us with the words of raising rates. I tell you, there's a possibility he will cut rates by December or January or February. If he raises like he wants to, he's going to be forced to restart a QE like he did in 2018. He was raising rates, and then the markets crashed, and then he said, okay, I'll restart the QE. I think he will do it again if he continues to be as nasty as he is. So, okay, this week, I think more important than Powell, I didn't see Powell. Where is he speaking? Double check that fact. This week, we have the GDP. So this is the final quarter GDP. Now, they say an economic recession. A stock recession has already happened. The indices fell 20%. That's a recession on Wall Street. The economic recession is when you get a GDP quarterly report to be negative twice. So this is the first quarter, and the update looked negative last time. If it actually comes out negative, that's our warning shot one to a recession. Markets expect it. How negative will be the difference? So if it comes out slightly negative, markets will rally. If it comes out really negative, I think they will fall at first and then figure out, wait, that might be good news, and rally. So it's
Nick,
really weird.
So it's 9 a.m. Wednesday, June 29th.
Great. Anyway, bunch of windbags. They belong in jail, if you ask me. They created this problem. So this is the equivalent. So the Fed has two jobs. They call them mandates. Job number one, make sure that everybody has a job, create jobs, but without creating inflation. So their job is mandate number one, employment. You have to create a good, healthy employment situation in the US without causing inflation. So you have to keep inflation under control. That's their two jobs. Last year, he was called upon to create jobs. He said, I can't do it without causing inflation. I can't do my job. I'm going to do half my job. And trust me, on the other half, the inflation is transitory. You morons, it's transitory. He kept talking to us like we're children. Transitory. And now suddenly it's panic. No, it's not transitory. Now he has to fix his other job that he ignored on purpose, told us he was going to ignore it last year. In order to do that, he's trying to destroy employment. So he just told us, I don't know how to do my job. I can do half my job. Last year, the half was employment. This year, the half is inflation. But last year, he killed inflation situation. He made it incredibly bad. And this year, he's trying to kill jobs. So what the heck? Why does he still have this job? He does not know how to do his job. He knows how to do half his job, yet nobody talks about it. He's an idiot. That's all there is to it. He is not an economist leading the biggest economy on the planet. That's incredibly bad. Anyway, and he's making it up on the fly.
I agree. There you go, Nic Chahine with the real take there. And now,
how do you really feel about him? He's an idiot. He belongs in jail. So, I don't think he's an idiot. He's doing idiotic things. I don't want to insult the person. I want to insult the actions. I don't get it. You can't do your job. That's what I get.
No, yeah, it's a tough one, right? But like, okay, so now putting that aside, right?
Yeah.
With everything that's happening on crypto, man, like I had a dream that crypto went to 10K. Swear to God. Like, yes.
Listen, it's not a dream. It is a mathematical fact. So here's the thing with crypto. I'll go to a day. This is Bitcoin daily chart. In November, I did a video. I said if they lose the neckline of 46,000-ish, they're going to come down to 20 or 19. Why? Because that was the place that they ripped at in 2017, 2018, and then crashed. And then it took them this much time to get up and go. And we never went back to test it. So I said, we need to go test it. And guess what? We did. But the scenario started up here with the head and shoulders, giant head and shoulders. The target was down here. So I said it's going to happen in several different waves. And I gave milestones that were almost to the penny. It's freaking insane how well it worked. And I said, I'm going to be buying on the way down because I don't know if it plays out all the way. So the last buy I had And I offered my coins. So I'm using Bitcoin as a proxy to all of them. So because what Bitcoin does, the rest will do to a degree or another. So one of my coins was Solana, SOL. And I'm going to do a whole show on crypto, maybe one get together for the team. So the easy way to explain it, if you do banking in the real world, you have a network. So if you do a wire transfer from here overseas, it goes across, I think it's called the Swift network. And the Swift network will charge you $30 for it, and they'll handle it. It takes 3 days, and I used to do them all the time for business, and it was a horrendously complicated system and taxing, and it takes forever, and sometimes they get lost. So this crypto process, any crypto transaction you do has to go across a network. Right now, Ethereum is the network of choice, or at least the more ubiquitous one. So Ethereum is the network. Ether is the coin that supports it. So if you do a transaction over in the Ethereum network, they charge you fees in Ether. So they call them gas fees or whatever, but it's no different than the fees that Swift will charge you. Solana is another network that competes with Ethereum. It's much faster. Some people say less stable. I disagree. It had one issue recently, but I'm not an expert at that. But I know that it has a legitimate market to address. So Ethereum has giant chunk. It's like Intel in the olden days and AMD eating into the Intel. They're both different. They both have pluses and minuses. I think they will both exist in the future. There's also Cardano, but I like Solana. So in this last dip here, right there, I said, I'm buying some Solana. I last bought it at 44, one part of many. I told them when it gets here, one part of many, I'm going to buy it. And then it went down, and I bought it at 27.3 or 0.4 during that last crash of Bitcoin. It went up to 42. Easy as pie if somebody followed me. But now overall, I'm green in Solana, even though I bought here because I knew it was coming. So to your point on 10K, I was convinced that this was the target, and I was ready to load up in Bitcoin, a full position. I can double my position right now and still be within the original risk I wanted to take from November. So I'm not doubling down. I'm adding into my full-blown position. So then I saw somebody else that I respect technically, the guy that built this tool, the W and the M tool, and this one. He thinks it could get to 9. And there's a long shot to 54 or 5,500. So I'm thinking to myself, maybe I should listen to him and leave the door open for a potential crash. So you dreaming about it is not that crazy. So I didn't load up on crypto other than adding Solana, and I left dry powder to add Ether and to add Bitcoin itself if we get down to 9. And the cool thing about it, you can engage with crypto. I'm going to give you the truth about crypto right here. I can't see the answers. I'm going to give you a second to think about it. And I'm almost positive you're going to be wrong on the answer. What is the riskiest thing about investing in crypto? Let's call it Bitcoin. What is the riskiest thing that is investing in Bitcoin? I'm not looking at the answers. I'm just going to give you a minute to think about it. I'm going to tell you. It's like an aha moment that most people don't think about. The riskiest part is where to put your money. Example, you trade stocks. Stocks are risky. The riskiest part of stocks is not putting your money in Schwab or TD Ameritrade. You're not worried about that part. With crypto, you are. You put your money in a company that goes bankrupt overseas, your money is gone. The risk is not the price of Bitcoin. The Bitcoin price is violent. So is Shopify. So Upstart trades like Bitcoin. So the risky part is not the price of Bitcoin, because you can forecast that and use your own financial acumen for that. But the one part that's risky that you can't control is fraud. If your money walks away, your Bitcoin money is gone. I don't care how good you are trading Bitcoin. You can't get your money. You're gone, right? So how do you eliminate that? BITO or OSTK. So BITO is all the way down because it started recently at the top of Bitcoin. So BITO is an ETF that tracks the price, the future of the price of Bitcoin indirectly through the futures. So if I wanted to buy a portion of Bitcoin now and a portion later, I would just buy BITO. shares or calls, or I would sell puts until I get a sign every week, make $50 off of a $1,200 risk, $50, $50, $50, $50 until they give me the shares. Whoop, thank you. I got Bitcoin now. No risk from the deposits, because you can do this inside of E-Trade, inside of Schwab, inside of Fidelity, inside of whatever trading company you have in the US. And they're not guaranteed by FDIC, but at least you're guaranteed no fraud. You know Schwab is going to be here, most likely. As opposed to a Qcoin. I opened an account in Qcoin. I did not fund it. I did not feel comfortable. I went in, it's like, whoa, that's what? That is like a casino. I opened an account at crypto.com. It felt more secure, although also overseas, but it felt like it was more committed to working with the US. And they report me to the IRS when I do transactions. So I am comfortable with that. That's a small payment I'm willing to pay, knowing that they at least are talking to the IRS and they're talking to US legislators and they're advertising here. So they have something to lose. So that's the risky part. If you do BITO, that risk is gone. There's no, the only thing you have to worry about is charting. So if you want to get long Bitcoin for a small price, just nibble on this guy. Just buy 100 shares or 50 shares and see how it works. And if it falls to 10 or 9, I would buy some more. Don't go all in. Leave room to add. Or sell a put to own it. And if you don't get a sign, then you made money out of thin air. Never sell a put unless you really can and want to own it. And it could scare you. It could go to down to 9. If that guy is right, it's probably going to get cut. Let's say it could go down to 9. Yeah. So I don't know if he's right or wrong. I'm giving him some benefit of the doubt, respecting his opinion. So I've spoken to him a couple of times and he's pretty sharp. So I was like, wait a minute, what if he's right about that? I'm avoiding this whole situation. I can delay adding. I am long already. And if you do want to do crypto, you don't have to invest thousands. You can invest $200 buying Bitcoins. You say, I only want $200 worth of Bitcoins. So anyway, all right, we're done.
Right. Yeah. I mean, Bitcoin is definitely there, but I wanted to ask you, Nic, what's your, because I don't think you covered it really in its entirety, but more or less, where do you think we're going with energy, considering everything that's happening all around?
I did a whole video for the group for energy. Okay, so let's go with Oxy. Oxy is the poster child for the energy trade. Why? Because Buffett is buying it. I got to buy it. Listen, you are not Buffett. You cannot trade like Buffett. Buffett is not buying stocks to make money off the stocks. Buffett is trying to buy the company so he can make money off of his cash flows. Besides, I don't think it was his purchase. I don't know. He says, be greedy when other people are fearful and vice versa. Well, he's being greedy and making other people greedy because he's being greedy. Here's my opinion. I think whoever bought it here is going to be stuck here for a long time, especially in Exxon and Chevron. This one, I don't know enough about it. In Exxon and Chevron, I think so. So here's what I did. I shorted it here and I shared it with the group. I said, I'm buying a $66 put. It was a massive win. I said, like a day later, or maybe the same day, I shorted Exxon here. I bought a $95 put, and that was a massive, 95 or 98? Anyway, let's say 95. Massive win. I left money on the table on both. I closed a little bit early. So massive win. Now, I'm still short the USO via credit call spread. And here's my take. If this one rallies back, I want to short it again. Why? Look at the size of this head and shoulders that is building. And I'll tell you my specific, this will be the last thing. I have to go after this. This is the Bitcoin scenario. You're building a right shoulder. And then if you lose this one, I think Chevron, Exxon will be here. Same for Chevron. There's a lot of supports in between here. I know I'm pissing off people right now, but this is what the charts are saying. And let me tell you what logic is saying. Okay. Pandemic level consumption of oil was up here, right? Before the pandemic. And then we shut down the world. We're still below this. Why is Exxon at an all-time high? Okay. Here's another piece of information, because they're telling us we have a supply problem. No, we have a supply chosen problem. We can have as much oil as we want to. We just choose not to get it for now. So supply is a transitory problem, to use Powell's word. We don't have a demand problem. We don't have an explosion in demand because physically demand is still below pandemic levels. So that's a bullcrap lie. Demand is still below normal. And they tell us that all car manufacturers, all of them, swore off fossil fuel. And that's a giant chunk. If this is a pie chart of all the consumption of oil, I think transportation is this big. This big. I don't know the number, but it's about this big. So hello, all of this is going to go to zero pretty much based on laws that are put in place. ESG investing, that's the being good to the environment, is no longer an option. It's a law on every continent. They're making it a law. You can't do this and you can't do that and you can't do this and you must do that and you can't do this. So by law, the consumption is going to be destroyed. And they're selling me on the idea that we're going to spike to high heaven. I don't get it. But hey, they are smarter than me, maybe, right? I don't care. If it rallies, I'm going to short it again. And how do I short it? I'll buy a put. I'll sell a call spread. I'll buy a put spread. I'll do any combination of the two. How do I not short it? By selling the stock short outright, traditionally. No way. I don't want to argue with stupid and lose. And I don't short it by selling a call naked either, because that's the same thing. So buying a put, I risk $100, $200 per contract. That's fine. Buying a put spread, I risk less. Selling a call spread, I'll risk $500, $1,000, and I don't even need a drop to win. So that's the kind of thing. Oil, I think, is a manufactured problem that will solve itself. And I told you I fight for a sport. One of the guys I sparred with this weekend or last weekend, I haven't seen in months. I said, hey, where have you been? Because I work on a rig. I'm a crane operator. And I said, who do you work for? He says, a name of a company. He goes, basically Occidental. And I said, how's business? I was trying to get some inside information from him. He goes, man, we're making so much money, but business is down 35%. So they're producing less. But the only reason why Oxy's P&L is much better now, the only reason is the high price of oil. So how long do you think the White House will let the high price of oil linger up here, right? They're going to drop it. And when they drop it, that P&L is going to get crushed. How much expectations have been built up to being the run rate forever? This is a special circumstance, very dangerous to get long stuff here. And here's to put it bluntly for XOM investors. I love Chevron and Exxon when they were in the pandemic lows, because that was they were paying 9 and 10%. Okay, so somebody that bought it here, what are you thinking? Let me show you what you're thinking. This guy who got stuck here in 2014 has been waiting 8 years for you to come bail them out. So you came and bought it here. This person is saying, thank you. Thank you. I've been waiting for 8 years. Same scenario. These are monthly candles. Look at how ugly this monthly candle is. Okay, miracle, it could come back and go higher. I think it's counterintuitive to expect it to. Whoever bought it here, I think they're going to be stuck here for a long, long time. Hopefully I'm wrong. I don't want people to lose money like that. But logically speaking, that was an ill-advised entry. How about this? I say it nicely. It was not an obvious point of entry. Now, according to this 2-hour chart, we could have a rally to here or to here. I can't wait. I'm going to get the opportunity to try to short them again. That's as honest as an opinion on the oil stock as I can. I've been answering this oil stock company question for a while, to the point where I type in oil X. My answer to every oil company, investors avoid at the top. That answer is at the top when everybody's looking to buy oil. Traders, do your thing. You can trade the hell out of it, up, down, up, down. But if you're looking to invest in Exxon for the long term up here because of dividends, I think you're making a mistake. There's so many better dividends out there. This pays now like 350, maybe 4 tops. 4 now, but up here was only 340. MMM pays 4. Verizon pays 5, and they're in the toilet into heavy support with excellent businesses that are not dying. So you can buy the I bond for 10% dividend, and it's guaranteed government stuff. 10,000 maximum per social security number in the household if you do it online. So if you have 3 kids, you can get 3 times 10,000. Yourself and your spouse, that's $50,000, 10% interest. Beat inflation better than that. You can't. So this is crap to buy it up here for the dividend. That's a horrible idea. Okay.
Right. Yeah, definitely. And And the thing is that, Nick, you've been covering oil for quite some time now.
Yep. I'm realistic, I'm agnostic, but I'm so pissed off by the rhetoric. People getting stuck in these oil stocks just because Buffett is buying into Oxy. We're not Buffett. We cannot trade like Buffett. He doesn't trade. He's investing in companies. He wants to buy the company outright. His company, by the way, is it a coincidence that his stock chart is like this? Why is that? And look how I traced it. Look, I said, possible technical thing, right? It came to fruition. I said, if it bounces, don't believe it. It's going to do this. And then it did more. What is happening? This is one of the best companies on the planet. Their P&L is so solid. Why do you think this stock is going into the crapper while he's buying the hell out of Oxy? Anyway, that's neither here nor there. I mean, this is falling worse than PayPal, for crying out loud.
Yeah, it's crazy. They own like thousands of businesses or something like that.
Right. And they're solid investment companies. The guy is genius, clearly. I'm not here to argue with his methods. I'm here to argue with the people chasing him up into Oxy up there. He probably knows he has reasons to do whatever he wants to do that we don't know about, but it's not an investable thesis. And look, if you don't believe in technicals, check it out. Shoulder, head, shoulder. Downside is this much. I don't think it's done, but it should be done if the markets are done.
Right. Let's do a couple tickers from the
okay
from the people here in the chat.
Hit me.
All right, folks, throw a couple tickers there, and
you're gonna tell me what they are. I don't have my chat room open.
All right, cool stuff. Let's see, Mohammed there on Zoom. Your view for Apple for this week? Will it rally? Question mark.
Apple, really? Okay, Philip, I have a video on Tesla. Go look at it. Find it. I'll share it with you. Apple SPY SQQQ. That's a stupid question. QQQ. Okay, here's my take. Apple is not my favorite companies. That's for starters. But whatever Apple does, the market is doing. So instead of betting on Apple, I would rather bet on the Qs. If Apple's rallying, so are the Qs. If Apple has a hiccup, the Qs will suffer a little bit, but not to the same extent. Hold on, Phil. I'm right here. I'm trying to answer questions. So I wouldn't short Apple here. I wouldn't chase it, but there's an opportunity to get higher from here. So the trade is to go with the flow. And the flow is they're selling rallies. The way they closed the market on Friday was too abrupt, too violent, too bullish. I don't know if they're going to give back some on Monday or Tuesday or Wednesday, but don't short it. But when we do overextend, and there's probably 40 to 70 to 80 points still available in the S&P, SPX. So that's a lot of upside potential. So if you're asking me for this week, I'll say target 1 for Apple is 142, target 2 is 146. The closer you get to 146, 148, the more likely you're going to buy somebody else's profits. And if you think about it, rallies are being sold. Look, this was a rally, sold. This is a rally. It's going to get sold at some point. Now, you get out anywhere here. And if it takes this out as a trade, you can expect it to get to here. I think we get to here, we fade, not that deep, somewhere here. There will be buyers. They come back and they hit an inverse head and shoulders that will eventually get it to here. But don't chase it too late. Target 2, 146 plus or minus, I would get out. Or if I'm looking to get long and I don't do it before it gets to 146, wait. Now you're risking buying these guys. So you want to see them take these guys out. The most conservative one is this one. You see it go above 152. Okay, you're going to miss out from here to here. But if you buy it here and it dips, you're going to get stopped out. That's all there is to it. If it dips, get long anywhere down here.
All right.
On a dip. Get long on a dip. This is what I call buy the dip or buy the rip. I say it often enough that I also have it on an automatic thing. So I say BDBR. So you buy the dip or you buy the rip, whichever comes first.
Okay, and then we have Josh Doc for REV, REV. That's Revlon.
Oh, I'm not going to even pull it up. That's a meme stock. I don't do meme stocks. I don't know what you're asking me to, permission to buy it up here or trade it. If you want to trade it, come to me, the live room. We can trade it intraday. I can help you trade it. As far as an investment, this is like ordering escargot at a restaurant. Are we out of chicken? No. I'll eat chicken until we run out of chicken, and then I'll order snot. Escargot. This is what that is. This is a daily chart. It's back into whatever happened here. Not for me.
All right, then we have B How with Roblox, RBLX.
Okay, Roblox is one of those companies that has a great P&L, a strong business, but grows a lot and spends a lot, and Wall Street has hated them from the highs. So just like PayPal, it looks like it's basing. Do not short this because they know how to make money. I know this because a friend of mine's kid asked his dad permission to spend whatever he spent to buy a sword or shield or whatever. And apparently his dad must have put the credit card on file because this kid is starting to kill it as far as results. And then they get a $6,700 bill. So he clearly, they know how to siphon money from people. So I wouldn't short them. If they just place the bottom, buy the next dip. If you're long, stay with it. If you want to get long, you missed out on a whole bunch, but you can nibble a little bit because it can get to 50 fast. I'm not saying it's going to 50 fast. I'm saying it can get to 50 fast. Anywhere near 40, it's going to face a lot of sellers. But if they do bring it down into the low 30s, I think it's an opportunity to get long. This is a daily chart. So really, to be fair, you need to engage on the lower level. And you can see how this is just met target 1 and target 2. If you look at it this way, it's not going to be easy breaching this level. But if they do drop to say 32 or 33, I think it's a good opportunity to swing trade it up. So I can put them right now. So let's say they go a little bit more on Monday, and then Tuesday they do this, and then they come back to here, and then they're going to try to do this. NEO, too late right now, Irene. I went long NEO before it spiked. I sold the put spread, and that's played out completely. Be aware, I'm afraid for NEO because what LI is doing and XPEV are doing way too fast, but don't short them. How would I trade Digital Turbine? I don't know. I have to read that. Joining the S&P usually means that people are going to buy it up. Don't chase. Don't chase blindly. Make sure you know your levels. Digital Turbine, I think I suggested it long recently. That's Mara, right? No.
Yeah,
what is that? What?
Somebody's asked the T-Mobile.
Oh, TMUS?
No, just T.
Just T. AT&T. No, not an obvious entry point. It's going into a prior fail. Either buy it on a dip if you want to, or chase it above here. Personal preference, AT&T does not know how to run their business. Be careful with that. What do I think of open like an open door? I'm avoiding all real estate trades. If Powell is going to do what he wants to do, he's going to have to destroy the real estate industry. So that includes Home Depot, unfortunately. So even though some of the charts look good, like open and such, I would avoid them just for that reason. Because here's the thing, Rodel, if open is rallying, the IWM is rallying, and or the SPY is rallying, why do I want to take the added risk of that? Apps. Oh, apps is Digital Turbine. Okay. So good P&L, high growth. It's stuck in this selling vortex of small caps that make money. So if I'm long the stock, I can stay long. If I want to nibble long, I can nibble long. I don't go all in because I want to add lower if I can. This rallies fast. Do not short it. Short term, I think they probably will dip to 16, 16.3, 16.2, 16.4. So if they do, I would engage with it. Let's say they rally a little bit and then they dip to here and then they come back to here, then would be the opportunity to do that. It will follow market. They will need the market to help them out. And what you want to look for is building of an ascending channel. so they can finally break out of this tremendous downside slide that they've been stuck in for months and months and months. So building a bottom is a process. You make a trough, and then you start building an ascending trend to tackle all these failing levels. If you clear 27, 28, you get to here, but that is a tall order, right? So you have to do it one step at a time. So you build the habit of buying dips, buying dips, buying dips, instead of selling rips, selling rips, selling rips. The machines will change the code. You've heard the term algo flow, right? Algo is deciding to sell rips, and then they bottom, and then algo will start deciding to buy dips, and then they tackle each one of these. So, all right. I have 3 more minutes in me, man. I got to go. I'm like running behind delivering some other things. So I would appreciate it. One more ticker, maybe. How about that?
Yeah. So let's do NVIDIA, and then just, some closing remarks just on the markets and, the chat room and all that.
Okay. So Francisco says short Coinbase. Hell no. No. Look at their P&L. Do not short Coinbase. NVIDIA. Okay. I would rather be long the QQQ, for the simple reason that NVIDIA is broken technically like AMD. By that, I mean their stock is at a disadvantage to the rest of the market to a degree. So for example, NVIDIA they lost the neckline where the target can be, doesn't have to be, somewhere down here, okay? This is eyeball, this should be as big as this, so do the math on your own. But here's the ticket. If they don't get above here, they're at a severe disadvantage, the buyers. If they don't get above here, the buyers at a severe disadvantage. So onus is on the bulls to go tick, tick, not make a new low. If they do make a new low, expect it to be in the 120 area in a blink. Now they need to beat this line. Why? Because they failed. And let's say they beat the line. They come back. Onus is to use it as footing, not beat it and come back down to here. And then repeat the process with this guy. Until then, this is coming. Until they do this, this is the target. This won't hold. So job 1, get above 200. Same with AMD. Michelle, SQQQ is just like the QQQ on crack. So I wouldn't touch bank stocks right now because of what what's his face is promising to do. He wants to destroy bank stocks in order to destroy the economy. Anytime banks spike on buybacks and dividends, I short them and I make money. So I'm not going to short them, but if you force me to trade the banks, I would short the spikes by buying puts at the money out in time, say August. A simple $200 bet could make you, I don't know, $400, $500, $600. At least don't chase. That Tesla video, Phil is jonesing for the Tesla video. Phil, and here, everyone, do me a favor, follow me on Twitter. Hit me up on Twitter, Phil. And you're welcome, Michelle. You can converse with me. Hit me up on Twitter, and I'll tell you where to email me if you want. Do me a favor. I need to hit 6,000 or whatever followers on Twitter. It's like, who do I got to pay to get there? Sure. My handle, I don't know if there's some people on YouTube I didn't reach. It's at Racer Nick, no K. That's my Twitter handle. Very, very Wall Street name, Racer Nick. Oh, by the way, I am not from Wall Street. I am an engineer that turned into business and finance, and now I do this. I figured that stuff on my own. You're welcome, Raylo. The charting, I put my skills against the best of them out there. I may not know the terminology the way they word it, but it's all about math and eyeball and geometry. And it's all easy stuff if you simplify it. All these lines you see, they're hand drawn. They're not many tools out there, right? Not many tools. Everything is hand drawn. I have a volume profile here, which is where they say price is truth. I have a couple of moving averages, and that's it. Whenever I need help, I open up for some internals like RSIs and stuff, but I don't need them to trade. Racer Nick, no, Racer, RACER, like I used to race cars. No, RACERNIC. It used to be a hobby, a passion. How do I determine what the algos are doing on a day? That's the secret sauce. Come join the live group. We'll tell you minute to minute. There are tools out there. You can pay for them. You drift cars? That's great. My son is a welder. He's a fabricator. He builds trophy trucks. One of his friends had a 3 Series. I forgot what generation. Anyway, so he came to him to weld the differential. He told him it's going to break if I weld it for you. He said, that's okay. He welded it so he can drift the car. Of course, it broke, but after a while. So I know what you're talking about. Drifting is fun. Phil, if I remember correctly, Google is running into a prior fail. Let me see here, 30. People are idiots. So yeah, of course it might run up into the split. And look what happened to Amazon, right? I don't chase that. Here's the deal. It will follow markets. And if you want to trade the split and you're early enough, maybe, when is the split? July 18th. You think people don't know about it, or what's going on? If you tell me headlines aside, they lost the neckline, like Nvidia, and they need to recover the neckline. So I'm leaving room open, but I think this might be inevitable. So this week they could beat 2400. They could get to 2450. I would be more of a seller up here than a buyer. So let them run it up there if they want to. If you're fast enough to get in and out, feel free to trade it. I mean, I'll help you trade it intraday if you're in my group, like second to second. But if it gets here and you're looking to get long, I think you're walking into a giant area where it can stall. It could stall. That's hundreds of points though. So the easy way to, quote, chase it is by selling risk down here and leaving room for error. If you force me to do it, I'll do it that way. I don't know if I want to buy shares or calls outright though. Cool, Denard. That's where you do it cheaply. Here in California, you want to rent a pad or something, it's like $1 billion. You know, my son would love to live where you are. He goes, can we buy a house where I can park on our front lawn? Like, yeah, not in California. You can't, unless you go to Hemet or something. There's no CPI next week. I thought it was CPE. Next week, I'm only worried about the GDP number. I don't trade news, so very easy. I don't trade news. I trade whenever people make mistakes, I try to capitalize. Join the group, you'll find out. We don't trade news. We are aware of the news and the potential headlines, and we trade the action off of it. I don't think there is a CPI next week. I'll double check. I thought it was a PCE, which is an inflation measurement of sorts, but not direct CPI. Besides, who cares what the CPI is? Do you know that there's inflation? Yes. Does the world know? Yes. A lot? Yes. Do we know that Powell is going to destroy the economy? Yes. Is he looking at the CPI? No. He said he doesn't care about 1 or 2. He says he needs several months of deteriorating CPI in order for him to change his mind. Several months. Those were his words. So 1, 2, 3, what is several? So he's not looking. He's an idiot. He's not looking. He's doing this to crush the economy. He is going to go down in history as one of the worst, maybe even the guy that broke America. How about that? Okay, get me off this before I start saying something real bad.
All right, there we go, guys. Nic Chahine, lead trader from the Options Inner Circle chat room.
Yeah.
All right, man. So thanks a lot for being here, man. I appreciate your time, Nic. And
I always appreciate you. You give me all the efforts I need, and you support the team well. People, I promise you good results. From the level of trading, like whatever you do, I promise you're going to get better at it. You may already be really good and become excellent because you learn a couple new things. That's the difference. And if you don't like it, if I'm unable to show you where the value is really quickly, you change your mind, they will bail you out of your commitment and you can ask for your money back and they'll do it. So thanks a lot, Rodrigo. And thanks a lot, everyone. I'll chat with you later.
No worries, man. Thank you very much, Nick. All
All right.
right, folks,
Later.
and I'm gonna show you the live trading room there, where pretty much Nick is hanging out the whole day. It was a great session. I mean, this is what Nirav, this is what Nick does pretty much Monday to Friday, 9 to 5 in the chat room, and Sundays as well. So, like before the session we had today, he was in a session that he has on Sundays with the options inner circle chat members. It's from 10 a.m. Eastern till about noon or a little bit later. And and the video, right? So that's the Sunday session that you guys are asking about. And the video was posted here, right? Sunday charts.
What's today? Hello, everyone. Good morning. And 7:26.
So that is the video, right? I mean, that for I think it's about 150 stocks. Um, and I can show you guys a little bit of the session. But for those that joined the chat room, I just want to show you really quick how to use this, right? And make sure to check your email because you got an email with like a form to fill out. That's where we're going to send the laptop after the 7-day money back guarantee, right? So just make sure that you fill that out. And okay, so this is the blue chat room, right? It's the main chat room. You have two channels here. You have one of them called Inner Circle Chat. That's where everybody is, all the members, Nick talking back and forth, right? Sharing videos, trade ideas, research, helping each other out. And then you have this other channel called Nick's Important Messages. And that's pretty much only Nick can post there. So he will be posting trade ideas, setups, entries, education, all that sort of stuff in video format, which is a lot, very helpful, right? And I think Phil was asking about the Tesla video. I think this is the one that Nick was talking about, that he just made a video on Tesla literally yesterday. And once you come in here to this channel, Nick's Important Messages, you're going to see a post every morning about 8:30 a.m. around there. And it's going to be like the main post, you could say. It's going to look like this, right? So last Friday, 8:24 a.m. Then you see it says live session, right? So in that live session, you click this and it takes you to this separate room, right? And there's about 24 people here, but Nick hasn't been there for hours, but more or less, you also have a chat room here where you can private message Nick. But when this is open, when Nick is there live, he's going to be sharing his screens, answering people in the chat, all that sort of stuff, live trades, call outs, right? During market volatility. So day traders and people that trade, a little bit more longer term can use it, right? Okay, so this is the live trading room, remember? And this blue chat room, it's like the main chat room, you can call it, right? So you have the two channels there. If you want to put sound alerts, you just have to click here on these bells and just make sure that it's yellow, right? And you're going to hear a pop when Nick is posting, depending on the channel. Really quick here, just have to check something here on the video. 1 second, folks. All right, and a couple shout outs here. We have LSU 101184. Big shout out to the LSU fan there that joined. Shout out. Let's go. Good stuff, man. And but yeah, folks, keep in mind it's the same link that we're putting in the chat room. That's the one that you should be using. Everybody that joins will get, a special bonus that I added as a courtesy. So just know that, once you go through the checkout and all that stuff, you'll see you have, you got some extra stuff there. So you're welcome. No worries. It's just, it's something that you get if you use the link, right? That we have here on this, YouTube video thing. All right, so let's see if we can get some of the videos here going, just to show you a little bit more or less how Nick, conducts the videos and that sort of stuff. So let's see if we should do the the Tesla video, or should we do maybe well, let's do the one from Sunday so you guys can get a general sense of how it was today.
What's today? Hello, everyone. Good morning. And
Oh,
seven.
before we get into this session, all right, really quick. Um, Nick did post here a link where you could go in there, right, today, and you could put in the link that you wanted him to review, right, for the Sunday session. And that link, once it's done, you will have this spreadsheet that Nick does for all the tickers. So if you scroll down, you'll see there's about 147 tickers. That's a lot. It's a lot for a Sunday. 146 actually there. So um, yeah, there's definitely a ton. So this is how it's going to look like, right? And you can kind of glance through this, and if you click on the trading view link there, it's going to take you there to the chart with the setups and all the levels pointed out by Nick. So let me show you the video now from the session we had today.
What's today? Hello, everyone. Good morning. And 7:26 Sunday, doing some charts. We have a long list, almost 150. So it was a good week last week. Let's start with that. Up 6 to 7 to 8%, depends on what you consider from low to high or from close to close. Closed on an absolute strongest point. I hated the way it closed. Closed a little bit reminiscent of about 6 to 8 weeks ago before the whole debacle started. The close went beyond where it should have based on the data. So it's not a giant deal. I just don't like it when I have questions that I can't answer. So before we get started today, I have a few things I want to make, a few points I want to make. First, let me see here. This is my first point right here. This is a tool that measures, quote, sentiment, but it's really demand on stocks. Here's the point I'm making. It's a very simple point. There's a giant wave of interest from people to buying stocks that happened Friday. It started the day before Friday. And let me explain what I mean. First of all, they report overall demand on stocks. They call it sentiment. It's not. It's overall demand on stocks. It was high even when we were starting to fall, and now it crashed. This is way too low. Way too low. It's like pandemic levels. Meanwhile, a number that had crashed way before this one did was this number right there. This is 161 now. This was 4. What is that? This is the number of stocks that had rising demand. So that means that at one point we only had 4 companies in the entire market that had rising demand. What does that mean? It means now we are a lot better shape. Why? Because when we were falling or starting to fall, overall demand was still blindingly bullish, while nobody was interested in buying any stocks. Now, overall demand is blindingly bearish, and everybody's interested in buying stocks behind the scenes. So that's a good flip. So I will monitor this number to see if it collapses again. If it does, we should be worried. That's what happened twice already. This number disappears, goes from 150 down to nothing. So on June 1st and 2nd, something like that, this number was 127. This is what, 30% higher than that number. And that's when the problem started. I'm just saying. This is underlying conditions that could indicate that there was a big turn at the end of last week. How long does it last? That's the question that we will try to answer with the charts today. Okay, it doesn't mean go out and buy everything. It just means that something changed late last week. Okay. Now, I do have a couple things. That was one of them. I'll take that out. Part of the requests, the forms where you guys request tickers, I had a few questions. Let's see here. Couple of good notes. Mahalo, Eileen. And Renu, thank you. Glad you're learning. So the question that really stuck out is somebody had asked, they were assigned Netflix and Roku, meaning they had sold puts or put spreads, and price fell through, and they got assigned shares. So they're asking, is it worth it hanging on to them? For Roku, I think is a blind yes. For Netflix, maybe through the earnings, but maybe I would buy some protection. So Netflix, we all know that what happened. The CEO came out in the last earnings report and said everything is awful and it's going to get way, way, way worse. That's what he said. So the stock got shellacked. So now maybe he scared everybody to the point to where he was bluffing and it's going to get better. Maybe. So if it was me and I'm stuck at 250, I would protect myself through the earnings and see what happens. Maybe he scared everybody so much that they will pop, but I wouldn't count on it. What if he's telling the truth? This is a very cocky guy. So I would protect myself with maybe a cheap put. And by cheap, I mean, what's wrong with spending a couple $100s to protect the portfolio? Roku, on the other hand, there is nothing in the P&L that shows risk. They're still growing. It's sold off based on perception that the chip shortage is going to cause it problems in the future, but it hasn't materialized yet. And I'm reading now that the shortage in, say, the GPUs is not there anymore because the demand dropped off because of crypto mining. So I don't know how that relates, the chip shortage to the GPU shortage. I don't know if they're related one-to-one or what, but I would be inclined to hold on to my, if I got assigned Roku, I would hang on to it. For Netflix, I would hang on to it, but I would protect myself. So those are questions I wanted to address, and thank you. Oh, and Daniel is asking, how do I decide? Daniel sees me flipping from time frame to time frame. So you just saw me flip to a weekly because I wanted the big picture. Usually I start with a daily if I don't know anything. And when I see a stock like this, I want to see what's here. I don't know what's below here, so I go to a weekly to zoom out. And now I have a better picture. If this wasn't enough, I go to a monthly to get an even better picture. For example, Oxy. Weekly is not enough because I want to know what's behind here. So I have to go to a monthly. And now I get a better picture. Okay, so let's go to Netflix one day. And if I wanted more, like, what am I going to do this week? I go to a 2-hour chart, a 1-hour chart. Okay, now I have some information. High, low, somewhere in the middle lies the truth. So I'm in balance. If I buy a call, I'm guessing it's going to go higher. If I buy a put, I'm guessing it's going to go lower. So there's really nothing to do except expect sellers here. So then if I wanted even more faster information, I get more granular. So here on a 15-minute basis, I think the dips will be bought. So if it falls into here, short term, it's going to be bought. What am I saying? The answer is yes to all of them. Depends what I'm trying to do. If I'm trying to day trade, I better be into the sub 15 minutes. But I zoom down in order to get the answer. So these were things I wanted to address. So this was done. And this is done. We'll get it out of here. So let's get started with the day. So the tickers are plentiful. We'll start with the daily. All right, put lines on. There we go. Okay, so there's going to be a couple of themes. There are a few oil trades, energy trades. I did a video for that. So I'm not going to answer anything on oil much except to say, if they rally, I will short, and the fact that we won big time. Anyone that followed me into shorting Oxy, Exxon, and or the USO made a ton of money during the worst week. The markets were falling out of control. It helped our position, but it was going to fall anyway. So now what do we do for oil? If they bounce, we short them. We're looking at AA here, not oil. But this chart looks like an oil chart. So anything that's commodity, like steel, aluminum, anything that was part of the meme of, oh my gosh, we have shortage in everywhere, oil, blah, everything rallied, uranium, everything looks like this. These stocks, I think, are toast for years. That's my opinion. Short of an actual shortage, this is all BS fed by the media. I don't subscribe to it. There is no growth in the world. And demand is falling on everything. They just fed us on this lie of everything is in shortage, blah, blah, blah. Everybody panicked. So this looks like a giant head and shoulders, probably 24 in the future with a lot of support. So what am I saying? If it bounces just like oil, it is an opportunity to get out, not to chase it. If you buy it here and you get to here, I would get out. That's the big picture. That's the message for all of these commodities. Man, Nick is on fire today. I'm not upset. I'm just frustrated with the message. So short term rallies, reasons to get out. If they lose this one, they get to 32. Rinse and repeat until they get to the mid to high 20s. That's personal opinion on that. American Airlines, they were attractive. They bounced at a pretty place, pretty good support. The businesses are in shambles. They don't know how to run their business, but from a stock perspective, that is a lot of support. So if you forced me to trade it, I would have sold a credit put spread. I can still do that, but I hate to chase an up 7% move. So what do I do with it next week? If it falls, I would buy the dip. If I'm long, I can stay long. This might not be easy to get to fill, but the target is up here. I think they can get to 15 to 15 and a half. So how fast are you? So if I were to trade it and it dips next week, I would buy the dip. How do I buy the dip? However I buy dips. If I buy shares, calls, credit put spread, sell a put, whatever. I think if it dips, it has, I should have put that chart better than the one I did. There, updated. By the way, I will put a link in the video to that table, which is this table, the spreadsheet that has everything. And I'm going to break up the video in threes, each with 49 tickers to make it easier to navigate. They are alphabetically ordered. Hopefully I did that. Yeah, they look alphabetically ordered. Good. All right. So I like the action here. Airbnb, similar scenario. I think it was at an all-time low. It has almost exactly the same setup. The bounce is great. It might hit short-term resistance. I would be willing to buy the dips if my assumption is that the markets are done falling. We don't know that. Oh, by the way, everything I say about upside potential has the caveat if the markets allow it. If the markets allow it. Okay, so just add that. If the markets don't correct hard. I expect resistance. And if we dip, same scenario, I would buy the dip to post a higher level. So either buy the dip if it comes, or you can chase the breakout if you want to for fast hands. I don't go all in. These are trading. Okay, there's another caveat I forgot. Everything we're talking about here, unless I specifically say it for an investment, it's tactical, because that's my underlying thesis for everything. Everything is tactical, meaning I'm trading it more so than investing it. But I did share some investment thesis out there, like Palantir and SoFi. Roku would be an investment. So, hey, Ronnie, thanks for the emails, by the way. So it is important to make the distinction that I'm not adding to current risk. I'm trying to trade an upside scenario. And the dip doesn't have to be the 96 anywhere in here, as long as they don't hold this. And let's say I bought the dip and then it lost this, I get out, stop out. Okay, so that too is a better trade. Airbnb. I mean, the company is good. I've used them once, and I have no, maybe twice. I have no complaint. Accenture, great bounce. I don't know if I want to chase it into that resistance. I think it's going into resistance. Huge bounce, huge. It might have some more upside, but it's going to have to do it without me. If they take these two, maybe they get to here. If they take this one, they get to here. But man, are we putting the cart before the horse? If it dips down here, I'll put an alert, buy the dip. So anywhere down here, I would be interested in betting on this holding. How? By selling a put spread, even buying a call or shares or something. AIG, I haven't traded it in so long. I think there's resistance between 54, 55. That gap is enticing. There's a gap here, but not for me. Let's see what it does with 53.5 first. I think there's resistance. If they take this out, maybe they get to 55. We'll see. ALU.ASX, right? Is this the right one? Rez? That's you, right? So anyway, this is going into resistance. This is not an obvious entry point. Hey, prior fails, great rally, buy the dip, better than chasing the rip. Now, if they take these out, almost exactly like Accenture, they go way up. And then this support here is actually now potential resistance, but it's way up there. You have a put at 27. You bought it, you sold it. You sold it. Yes. So Rez asked for this stock, and he sold the put at 27. Perfect place. I wouldn't mind owning it at 27. So they collect money for selling the put. This is a bullish trade that does not need a rally to win. What does that mean? They sold insurance to somebody that has stock and wants protection. So them selling the put says, hey, you, Mr. or Mrs. out there who owns stock, if you want to give me your stock at 27, I'm yours. And for that, they collect money. And if they don't give us the stock, then we keep the money. It's like an insurance company. Best way to buy a stock that you like and you want to own, and create cash if they don't give it to you. Yes, sir. Thank you. AMC, love it. Best company on the planet. No, I'm being sarcastic. Don't believe me. I think it's headed much lower. And if it does rally with GME, it's shortable. But please do not short the stock outright. Do not short the stock outright. How do you short the stock responsibly? Like we did Oxy. It was just a simple buying a put, simple buying a put spread, less nuclear than a put, or selling a call spread, which is a bear call spread, which is also limited risk. Why? Because I collect X, that's my maximum profits, and if I'm wrong, I lose Y, my maximum loss, not a penny more. I would condone even doing both, selling a call spread and buying a put for a harsh short. So if it comes up to 14, I would think it would find resistance. If it comes up to 15, 16, I would be tempted to short it myself. In fact, let's do that right now. Okay, fundamentally, they need to change their story. AMD, not my favorite stock. Great company, but its pattern right now, they still need to get back to that 104, 108. Otherwise, the huge head and shoulders is still in play. It and NVIDIA are in the same bucket. There's a head and shoulders up here that, like Bitcoin, this is the 46,000 level of Bitcoin. And now they lost this one and they're trying to recover. So now they have a problem here, a problem here. Look at that candle, 94. Keep in mind 94, I'm going to give you a new number, 106 and 88. 94, 106, and 88. That candle, the weekly candle from May 16th. Very important levels. Look left. I'm going to put my cursor at the middle. And look left. How important was that? Watch this. What? Wow. What is the high here? 94.28. What is the close here? Which is open and close should be what did I say? Open is 93.86. That's pretty close. So it's an important spot. 93, 94, 92, important. So short term, it might have room to rally, but I would be rather long the Qs, to be honest. Why take on the shortage issues, this pattern issues, or anything? If it's rallying, the Qs are rallying. I wouldn't add anything right now. Somebody's asked me what I add to Adobe. First of all, we're not talking Adobe, and but in general, I can tell you we're not. I would not add to my risk unless something is changed, or if I bought it earlier, knowing it's going to fall potentially, and now I'm adding, like I said before, like I added Solana at 27 because I knew it was going to fall, but I wanted to be long at 40 whatever. I bought it last, and it went down to 27. I tripled. So now I'm green with my trade, but I left room to add more. But this was my plan from weeks ago. So if that's the case for you, you can add. If you're just adding because you feel better about things, I don't think that's the right thing to do. Okay. Watch your volumes, folks. Please, please. This is not a live trading show. We're recording it for home use too. So please. Amazon. What do they do? This is not an obvious entry point. It went from here to here, took back half. That's the easy work. It will rally with the markets. Thanks, Rez. It will rally with the markets. This should be a lot of resistance. I have to tell you, the way the markets ended last week, don't be short many things. Don't short because of you disagree with the move. Don't. Because the fall, I'm going to backtrack. SPY one day. I made that point to other people live. I don't know if I made it here. I think I did. These candles on the way down, I haven't seen in years and years and years. This is the most violent drop I've seen in many years. I can't remember the last time we had. This was more violent than the pandemic, the way I remember it, with no pandemic problems. I mean, we had no imminent problems. We had words from the Fed that caused these words, and stupid Jamie Dimon. I call him stupid because he helped this, and now he's coming out saying, "Ooh, we're going to the moon." Anyway, so don't respect these candles. We don't know what the mirror image is going to look like. Logically, if you fall from here to here and you get back halfway, you should find some resistance, but I wouldn't short just because of that. Just be careful with that. I know the knee-jerk reaction is to, oh, it's been working, I'm going to short everything. Okay, that was a sidebar conversation. So, Amazon, good company. Time to get all in. No, if I'm long, I don't add. If I'm long, I can let it run. If they take this out, they can get to 144. So don't short it harshly. Okay, you see these. Let me see here. These comments. This was good support lost, so I moved it forward and I said now resistance question mark. We're right there. We drew several bulls or bullish scenarios. They all came to fruition all in one day almost, which is way too much happiness. Resistance now is really support, but the point is we're hitting milestones and they're not respecting them. They're just slicing right through. So if we dip here, I expect them to come to here and get to that and that. And if they take this out, they get to here. Now, if I get long and we have a conniption in the market and we lose this one, I get out because I don't know where is the low below this one. It's already cheap. If it dips to here, I would get long. I would get long how? I would sell puts to own shares. Sell puts and then buy calls later. Now that it's $100 stock, it's easier to sell puts naked in Amazon. It requires less. Smaller accounts can do it. That's what it does. APA, oil company comments apply here. If you don't know what that is, rewind the video to the beginning. I would not buy the dip. And if it does bounce, and then you bought the dip, I would exit. If you're stuck in the stock and it bounces and that fixes your problem to a degree, I would exit. I expect more calamities there. But I'm not an oil expert, and oil experts are super loud and obnoxious, and they will talk the stock price anywhere they want to. And if that happens, I will short it again. Baba, I think it's vulnerable short term. And I have to tell you, from the perspective of NEO and LI and XPEV, this is likely to happen. I don't know why. However, if it takes this out, get out of the way. This stock should be $180. On paper, this stock should be $180. And there is a possibility for that, if not more. So don't short it just because. In fact, 280 can be done, but let's talk 180 first. Okay, so if you're long, enjoy it. If they take this out and you want to get long, fine. Just know that it's a Chinese stock, ridiculously dangerous. Look, you can draw a channel right there, right? You can draw a channel. Rally, sold. This is a weekly chart. Rally, sold, rally, sold, rally, 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 rally. So be careful. All right, that's Baba. BAC, I'm not interested in going long any banks. This is weekly. Low, high, somewhere in the middle lies the truth. This is the pandemic area. Okay, so 29, 50, 30, below 30 is definitely support. But I don't know about the upside potential. Plus, if Powell is out there to get the economy, he's going to have to destroy the business of banks. So the closer it gets to 33, the less likely I would want to be long. But if it does take out this line, they will probably get to 34.50. So the way I would trade this one, I would sell puts to own shares and make money off of that and risk getting assigned at a decent price, or sell a put spread and let basically the same thing without the threat of being on the hook all the way down. Great company as far as financials are concerned. Bed Bath & Body Works. Why? Why are we dealing with this company? Okay, so if the stock market can't find footing, why are we dealing with this company? If you're asking me because you're stuck long, I would use any bounce to get out of that thing. If you're asking me to invest money in it, everything is going south on it. If you have a thesis on it, that's fine. But from the charts perspective, this is not an.
Okay, folks, just wanted to give you a quick show really of what the Sunday session is, right? How it goes more or less. That was about 23 minutes that we watched, but this goes on for more than an hour. So I'm going to leave the link in the chat for you guys to join. Keep in mind, there's a 7-day money back guarantee, and reach out if you have questions. Thanks a lot for being here, guys, and we'll see you there in the chat room tomorrow.